All right, how's that? Is that mo better? There we go. That's what I'm talking about. Man. All right, here we go. Now, let's try this again. Good morning. Hope everybody's doing well. There's our first of many technical difficulties today, I'm sure. But man, if that's as bad as it gets, we're doing all right. Welcome to the room. Nice to have you guys. Trader Edge, you came back. I like seeing that. I'm Mark, and I talk about patterns, guys. Talk about patterns every day. I talk about advantages. I talk about entries. Sometimes we're even known to talk about exits. Everything that we do is a pattern. What is today? Today's Tuesday, right? And guys, it's October 7th, and my first stop each and every morning on the internet is forexfactory.com. I want to make sure that there's not something going on that could disrupt my patterns, guys. And the reality is that when news breaks and somebody reacts, the market just becomes too quick. I can't put stops in place. I can't get my targets where they belong, and sometimes it just turns around. Just boom, emotional reaction. So that's my first stop, and there's really nothing going on today, guys. A bunch of people talking, probably not saying much of anything. It's all low impact. So we're just going to get to work. Is the volume good? Can you guys hear me? I just want to make sure. I'm always nervous when I have a challenge right off. So what we're going to do today, guys, believe it or not, is we're going to learn some rules. Anytime I hand you rules, these are rules that we have proven are able to win more than they lose. These are patterns that have been proven to bring more success than failure. These are patterns that are easy to read, that are easy to find, and really, guys, these are patterns that optimize your chances of success. Yeah, we're doing some testing, Victor. But isn't it the same trade? Whether it's 15 contracts or 2 contracts, it's the exact same trade. It's the exact same advantages. It's the exact same entry. It's the exact same everything. The only thing different is you pucker a little bit because you see that big number. That's normal. That's why we start small, right? So guys, we're going to go through the hour, and I'm going to talk about 2 platforms. Let me get everything set up here. We're going to talk about NinjaTrader because we've been talking about NinjaTrader for darn near 20 years, guys. NinjaTrader is the platform that we've been on the longest. However, we also have TradingView now, thanks to Nexgen Pro Trader funding. I hope you've gotten your free account, passing some evals, guys. The 2 are different, and let's just say that one's not better than the other. One's not more important than the other. One isn't the one that makes you cool in circles, and the other one doesn't. There's just a different approach to both, guys. So when we talk about rules, they will be specific to a platform. We're going to go through the rules individually, break them down, what they look like, how to study them. I'm going to hand you a plan to be able to follow the rules. I'm going to hand you spreadsheets so that you can study the rules, guys. My promise to you is that by, I would say, 10:15 Eastern, you will have everything that you need to be successful with the software. The only thing Nexgen doesn't give you is experience, guys. I don't give you the reps that it takes to make these looks easy. I don't give you the drive to study these looks, to prove that they win more than they lose. But if you have that, you're in a good spot. Everybody in the room has the ability to simulate. Whether it's NinjaTrader or TradingView, guys, you can go after it with no financial risk, no fear of losing real money. Doing nothing more than learning the rules and learning to follow the rules. Because what happens is when you're on simulator, guys, home runs don't count. Strikeouts don't count. Foul balls don't count, guys. It's like the batting cages. What you're doing is you're building the muscle memory so that you can follow a plan, so that you can have an edge every time you enter the market. So I'm going to encourage you guys to at least try to follow the rules. Avoid the temptation of becoming a simulator millionaire. because it typically results in failure when you go live, when you get lucky. Luck runs out, guys. Don't practice the wrong trades. But your simulation brings you to the first step in becoming a confident trader ASAP. And guys, that's post in the room. Tell me why you're doing what you're doing. Show me where you entered. Talk about your exits, guys. And you could even talk a little bit about the emotions that you had during the trade. And what you're going to find is that the more stressed you are in a trade, the less likely you are following rules. When you post in the room, you get a private session with me. We're going to talk about the advantages. We're going to talk about disadvantages. We're going to look at the rules. And we're going to go back to three very, very consistent concepts. We're going to go back to momentum, path, and entry every time. And my goal is that we get you in a position where you can look at your chart and recognize these three simple advantages: momentum, path, and entry, whether it is NinjaTrader or TradingView. And then you can begin to make good decisions on whether or not you enter the market, on whether or not you have to manage assertively, guys. And your indicators are going to tell you everything that you need to know. As you learn to read your indicators, post in the room. Let's make sure that you're reading them correctly. And then keep it simple. There is just the siren song, guys. I want to be in the market. I need to be in the market. Every tick is my tick. Every move is my move. Every top is my top. Every bottom is my bottom. And the reality is, guys, that you don't need every move in the market. The futures markets trade billions hourly. It takes $400 a day to produce a six-figure income based off of your trading. Find the best trades, the highest probability trades, the trades that are more likely to win, the trades that are rooted in having advantages and an edge, guys. And if you keep it simple, I'm going to hand everybody plans, 2 trades in each plan, guys. You've got to learn the looks. You've got to learn what it looks like to have your edge. You've got to learn what the pattern is when your trade is coming to be. And if you learn the looks, they do become easy. So when you post in the room, that's awesome. That's the first step. The second step is use these spreadsheets that I'm going to give you. The first one is the trade tracking sheet for NinjaTrader. Has all the rules outlined. Has about 500 client trades showing you the exact same pattern, entry sequences, management ideas, patterns that repeat themselves, place to build your plan, even a trade tracking sheet, guys. I'm going to give you this, and that particular spreadsheet goes with the KISS plan. And the KISS plan is designed to optimize your chances of success, guys. This is your simplicity. This is 2 trades, both with a checklist for entry, both with ideas on management, giving you something to follow as you learn to read your indicators. For TradingView, you're going to get the same thing. You're going to get a TradingView journal that has all the pictures of what you're doing, trade tracking sheets, a place for you to put your core looks in, and then also a plan. And the plan only has 2 trades, 2 checklists for entry, guys. Simplicity is what it's all about. I just dropped all those in the room for you. So we're gonna learn rules. You guys are gonna practice, post in the room. Guys, bombard my room. Make it a conversation. You do have to type in. Your microphone won't work, or it'd be a little chaotic. But every time you have a question, type it in the room. Every time you take a trade, post it in the room. Every time you look at your chart and you're like, man, Mark, what the hell is that? Take a picture, drop it in the room. Say, Mark, what the heck is that? And we'll talk about it. I promise. And then as we get going, guys, the whole job description in my life is to teach you to read your charts. To teach you to look at your indicators. Let me slide this over here. And to recognize advantages. And to take those advantages and turn them into the trade. And that brings us back to momentum, path, and entry, guys. There's only 3 rules to take these highest probability trades. There's only 3 things on your checklist to get you in. But what these plans, this first hour is designed to do is to get you reading your charts, focusing not on the money, but the process that produces the money, the recipe to build the better mousetrap, guys. In chart reading, what you will find is about 90% of your day. For example, I was up at 4:30 a.m. this morning. This class starts at 6 a.m. my time. I haven't taken a trade today on my live account. I was watching NinjaTrader and it didn't set up. I did, however, take one trade, or no, two trades. I took two trades on TradingView. Set up nicely. Beautiful, beautiful trend trade. But it's 90% of your day is doing nothing, guys. 90% of your day is playing solitaire, texting your wife, telling her you think she's neato. It's playing video poker. It's reading a book. It's drawing a picture. It's doing anything other than chasing money, guys. Because what we're doing is we're looking for advantages. When you learn to read your indicators at this most basic level, you're going to understand three very key concepts. You will understand where the market is likely to continue. This is where entries come from, and the continuation that we speak of is a trend that has already been established. It's just a bounce point where the trend is likely to continue. That's your entry. You'll understand where the market is likely to go. This is going to be great for profit targets, and then you'll understand where the market is likely to stop. Now, likely to stop areas have a very specific name. They're called termination conditions. And a termination condition can literally stop a trend, can create a giant untradeable bounce, and really termination conditions, trading directly into likely to stop areas, is one of the biggest problems that new users face. This likely to stop area is going to keep you in that 90%. Now we're going to start with NinjaTrader. In NinjaTrader, high probability trend trade has three rules. That's it. Three rules. When a rule is true, it creates an advantage. When you have the accumulation of three advantages, you have a trade. Now, the recipe for a trade has nothing to do with your desire to pay your mortgage. The recipe for a trade has nothing to do with your hopes of glory and fame, guys. It is nothing more than a pattern that is repeatable, that is testable, that you can prove wins more than it loses. And when you learn the pattern for the high probability trend trade, this is a trade that typically wins up to 70 to 80% of the time. These three rules happen on two charts. This is it. This is what your charts will look like when you take a high probability trend trade. This is literally your pattern. Your large chart is a very slow chart. It's a broad stroke of a brush. It shows the overall opinion of the market, and it takes one bar, the most current printing bar. You will be able to define direction, momentum, and areas that may be problematic. Guys, your first two rules are met on the large chart. 66% of your advantages comes from one bar on one chart. Simplicity. Now, inside of this bar, there's about 30 ticks. Nope, 28 ticks. In that 28 ticks, guys, there can be 20 to 30 bars depending on what they do. And this small chart is your entry chart. This is a refinement chart. This is a chart that's going to allow you to pinpoint with pretty awesome accuracy where the market is most likely to continue. When everything says down, you'll be able to pinpoint your bounce point, where the market is probably going to push up, hit its head, and continue with the downtrend. This refinement process allows you to reduce risk. It also allows you to maximize your profit potential. We use two charts because they are a reflection of who you're trading with or against. And the large chart, I want you to think of them as the large crowd. I want you to think of them as big business, as institutions, as the man, the 1%. I don't care what you call them, but they're in control. And if they wake up and want the market to go up, the market's going to go up. They don't even know you exist. And if they want to put some momentum behind it, it's going to be hard to stop that market. And if there's nothing in their way, it's really going to be hard to stop that market. So rules 1 and 2 keep you in the good graces of the large crowd, because the large crowd wins. Now your small chart, these are your fighters. These are your ne'er-do-wellers. These are the men and women that are still richer and more powerful than you'll ever be. And they can create little ripples in the matrix, guys. We call it a pullback or a retracement. And the clinical definition is a retracement is a small move counter to the underlying trend, meaning that when everything here says up, these yahoos try to make it go down. The cool thing is they fail. Typically 70 to 80% of the time when the large crowd has momentum and a clear path. So their failure point is exactly where the market is most likely to continue with the underlying trend. So we're going to use the two charts. Remember which side you want to be on. For NinjaTrader, you have indicators, and we're going to talk about the indicators. Don't overthink them. Don't rank them. Don't rate them. Just learn their names, guys. You're going to have areas. Anytime I say area, I mean a horizontal line on your chart. Areas have names. You can have divergence high lines. It's a magenta line. See, I matched the colors so you know what it was. And it'll print if there's a loss of momentum at a pivot. That's it. Buyers are pushing it up. Sellers steal their momentum. And right about 2.5 bars down, that pink line comes up and lets you know there was a loss of momentum. And you'll see it as a cyan line, baby blue, down at a bottom pivot. You're going to see Fibonacci resistance. It's a red line. When the market is in an uptrend, it could stop the market, create a bounce, cause a reversal. You're going to see the blue lines. These are Fibonacci support. In a downtrend, same as resistance. It could create a bounce. There could be a reversal. It could stop the market. And then you have yellow one-to-ones. And yellow one-to-ones are like fibs in the moment, guys. In an uptrend, they can behave as resistance. In a downtrend, they can behave as support. So anytime you think of an area, if the market is going up, divergence highs, Fibonacci resistance, yellow one-to-ones are all areas of resistance that could stop the market. If the market is trending down, Fibonacci support, divergence lows, yellow one-to-ones are all areas that could stop the market. So it's either support or resistance. Both charts have trigger lines. Now these are your workhorses, guys. Trigger lines show up in everything you do. They are the Mrs. Krabitzes of the trading world, guys. They're always peeking out the window. They want to be a part of things. And there are small triggers, two solid lines. That's it. It's a fast-moving average. All you need to know is that these are the small ones. And then there's large trigger lines, and these have the dashes on them. And these triggers will work together. First, to define momentum, to make sure that rule number one is met. They will also give you a lot of help in defining a termination condition, making sure that you're not trading into areas that are more likely to hold than break. And then finally, the large trigger lines, these are going to help you define your amazing entries. So trigger lines show up in everything that you do. So it's 3 rules. Let's watch this. It's 3 rules. It's only 2 charts. You're not in control. Learn the names for the areas. Know what the triggers look like, guys. And now what we're going to do is we're going to use those areas, we're going to use those charts, and we're going to break down each rule individually. Again, a trade happens when you have momentum, when you have a clear path, and when you have an entry area. Those are your 3 advantages. That's the brand new user, black and white, let's keep it the best of the best. You will get to a point to where you look at your charts and you say, okay, I have all 3, high probability, wild horses couldn't keep me out of this trade. But you'll also say, okay, one of them's missing. I've got 2/3 of my advantages. You know what? I still feel good about this. I will enter this trade. However, I'm going to have to manage it a little more assertively because maybe it isn't the perfect trade. And then when 2 out of 3 go, guys, when 66% of your advantages disappear from the screen, I hope you say this is low probability and my kid's college fund doesn't need to be risked on it. But that's a decision that you'll have to make. So everything starts with strong triggers, guys. Rule number 1 is strong triggers. Strong triggers create the advantage of momentum. Strong triggers is the easiest lesson that you're going to get today, guys. It has nothing to do with Fibonacci areas. It has nothing to do with price bars. It is simply one look using the trigger lines. When the background is green on your large chart, we're in an uptrend. And when we're in an uptrend, the only way you could ever have rule 1 met is if both your small triggers and your large triggers are green as well. And when the background is red, it's a downtrend. And the only way you can have rule number 1 met is if small and large triggers are both red. And when the colors don't match, rule number one is not met. Shadow picks, open it back up. You can't even disconnect. Control Alt Delete. Hit Control Alt Delete at the same time. Go to your task manager, kill Ninja. That's about the only option I can think of. Otherwise, push that big button on your computer, shut it down, and open it back up. Sorry, I know that's frustrating when that happens. Fortunately, that's a Ninja Trader error, not so much a Nexgen. But yeah, either Control Alt Delete or push that button, man. So strong triggers is a look. It is in an uptrend, the small triggers are up and above the large triggers. The large triggers are wide, guys. There is no boogie in flat triggers. Somebody said that once in the room. And when they are both up, when they're both wide, it's that space that's created. Whether it is a little bit of space, whether it is a lot of space. That space lets me know that I have strong triggers. When I have strong triggers, whether it is up or whether it is down, when the smalls are below the large, when the space is present, the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is your first advantage, guys. Odds favorable momentum is hard to stop. Odds favorable momentum can break key areas, guys. Odds favorable momentum will even cover some of the mistakes that we all tend to make as new users. So strong triggers is nothing more than one look. Weak triggers, the opposite of strong, the sit on your hands look, the do nothing look, the 90% look, means that your small triggers have worked their way back inside of the large triggers. I want you to picture scissors open, that's your strength, scissors closed, that's your weakness, guys. And when you have weak triggers, anything could happen up or down. This is where the market tends to kind of reverse from the middle of nowhere. This is where key Fibonacci areas are more likely to hold. So strength, weakness, guys. It's just a look. And if you stretch out, I don't know, it's probably 5 hours, there are strong triggers down, there are strong triggers up, there are strong triggers down, there are strong triggers up. Guys, it's the same look every time. Doesn't have anything to do with areas. Doesn't even have anything to do with price bars. It is just trigger lines. Is everybody cool with that? That's your strength. There's your weakness, and I'll be darned, 4 out of 5 times, even without the help of areas, weakness is exactly where the market reversed, guys. Let it be black or white. Let it be strong or weak as a brand new user, and then you will find opportunities outside of it. Everybody good with rule number 1? We'll head to rule number 2, make sure we're not trading into brick walls. Awesome, guys. Termination's false. Nothing in the way that could stop the market. A termination condition is a Fibonacci-based indicator that could reverse the market, that may reverse the market, that might reverse the market, that has the potential to reverse the market. And when the recipe for termination conditions is true, it typically reverses the market more than it doesn't. That's what takes away your edge, which is why we're going to make sure that we have room to profit targets, while you're going to say clear path, guys. You're going to couple momentum and clear path, and you're going to feel good about what you're doing. The areas that could stop a market are on the large chart. The large chart defines areas, guys, and it's those same ones we talked about. Divergence, highs, lows, resistance, support, yellow one-to-ones. All of these areas are where decisions are made by the large crowd. All of these areas are thousands of calculations for Fibonacci, where the market has already bounced, retraced. It's Fibonacci numbers, guys. So if decisions are made at key areas, rule number 1 for defining a termination condition is allow price to reach the area. Let the large crowd get to that Fibonacci resistance. Let the large crowd get to Fibonacci support. And when price arrives, if none of your triggers have broken through resistance, if none of your triggers have gotten below support, guys, you've reached a termination condition. This is exactly what it looks like historically. This is what it's going to look like in the moment. Price reaches that area, triggers remain below. This is an area that could stop the market. This is an area that could create a big untradeable bounce. This is an area that could create a full reversal, guys. And if it does create a full reversal, If those large triggers go from green to red from a high or red to green from a low, you have what we call a strong top or bottom. And a strong top or bottom, while it's not mandatory for the high probability trend trade, it increases the likelihood of success. And I want you to learn strong tops or bottoms because the second trade that I give you that is dependent on the potential of an area to break, it requires a strong top or bottom before you enter the trade. So termination conditions, guys, price gets there, ditch price. Has everything to do with the trigger lines. Count your triggers. If no triggers make it through, it's a termination. If that reverses the market, it's a strong top or bottom. But guys, Fibonacci breaks, typically with momentum. If it didn't, we'd be caught in a range forever. Here is a play-by-play of Fibonacci breaking and colored numbers to let you know whether it's a sit on your hands, proceed with caution, or go cat go. So if price reaches Fibonacci resistance, also that divergence high, and none of your triggers break through, you have a termination condition. Rule number 2 is not met. Absolutely no trades into that area. Just assume that it's going to take your money. If 2 of your trigger lines get above, both small, and you have momentum, this area has the potential to break, guys. But for the brand new user, we're still pumping the brakes. This is not the best look. This is not the highest probability look for a breakout. A lot of you will take this 2 trigger look. Brand new users, this one still typically loses more than it wins. When 3 trigger lines break through, both small, 1 large, with momentum. Don't forget to bring your momentum, guys. Now we can proceed with caution. Now we can say, hey, the potential to break is there, but it's only potential. If I take a trend trade here, I'm going to have to manage it assertively. I'm going to have to look for change on my small chart. I'm going to have to make sure that I'm managing because it's not broken yet. But guys, this is the best of the best. When 4 trigger lines make it through an area, now the area is broken. Now the path is clear. Now resistance is going to behave as support. Now support will behave as resistance. And guys, your path remains clear until you hit the next area. And crude oil is putting on a clinic on termination conditions today. Price reaches Fibonacci resistance and a divergence high. None of the triggers break through. There's your reversal. Only 2 triggers through. Couldn't do it. Back to resistance to the freaking tick. Triggers below. Down it goes. Right to 1-to-1s. 2 areas of support where the market retraces up to resistance. And then 2 triggers through. It doesn't go. And then there's the giddy up. Right off of resistance. And where did they stop? Right at Fibonacci support, guys. Rule number 2 is designed to keep you safe. Rule number 2 is designed to help you recognize where the market may stop. Rule number 2 is going to aggravate the ever-loving snot out of you because there's going to be times where you can't seem to get your rules met because the areas are stacked. Guys, I want to remind you, 90% of your day is doing nothing. The futures markets trade billions. The easiest trades you will ever take, guys, the easiest trades you will ever take with the Nexgen software will have momentum and nothing in the way. And these tails on a large chart, guys, that's your pullback, that's your fight, that's your retracement. You're going to be able to, in the next 10 minutes, be able to pinpoint right where these tails are most likely to form, guys. Those are going to be your entries. That's the best of the best. This is your highest probability. Is everybody cool with termination conditions? No triggers, no trade, 4 triggers, clear path, go, go, go. Did it work out? Awesome. Nice shadow picks. That's one of the great things about electronic orders is they're still there. I have lost Ninja come back and been up money too. It's a great feeling, isn't it, when you don't even have to do anything? That's why stop placement and targets, intelligent targets, are so important. Nicely done, Shadow Picks. Guys, we've got momentum on the large chart. Life is good. We've got a clear path on the large chart. Feeling great about it. The large crowd has told us that they want the market to go up, that they want it to go up fast, and there's nothing in their way to stop us. Now we need the small crowd to fight. Now we'll turn our attention to the smaller, faster chart. Now we'll use that refinement process, guys. And rule number 3, I'm going to encourage you. Learn the language for this rule, guys. If you learn the language for this rule, you will literally call your shots. You'll wait for the market to come to you. You'll actually use a limit order. As you wait to buy or sell a pullback at an area, at a fib, at a mid-band, at a yellow 1-to-1, and that area needs to be inside of triggers. So learn the phrase, I'm going to buy or sell a pullback at an area inside of triggers, and it will take you to the promised land. When the large chart says down, when the momentum is strong, when the potential to break there is there, your large crowd is trading all the way down here, and you're feeling like you've missed out. Guys, that's where the fight starts. And all of these bars, the pullback, the bounce, and the continuation, all happen inside of this one bar. And this is just a pattern, guys. You're going to buy or sell a pullback at an area inside of triggers. The best of the best trigger look is what I call favorable large triggers. Favorable large triggers means that your large triggers, the smooth on their 5-1 chart, and your synthetic triggers, the stepped large triggers on your 5-1 chart. These are the triggers from both time frames. They're superimposed onto one chart, and these trigger lines will define where the retracement is most likely to go. Because they're moving averages, there's this crazy phenomenon called regression to the mean, meaning that price just comes back to moving averages, guys. It's way outside of my pay grade. I don't understand it, but I know that it's true. And I know that the trigger lines will define where the market is most likely to retrace. And the tighter they are, one on top of each other, like two snakes riding piggyback, the smaller that retracement zone becomes, the more accurate your entries become, the lower your risk becomes. The wider they are, the bigger the range. So here's your pattern. We've already decided that the large chart is up, that the momentum is strong, that the path is clear, and it's just time to go find an entry, guys. And you're going to have to sit through and stare at a market that seems to be going without you. This is where that cute little phenomenon, the fear of missing out, is going to just gnaw at you. And you're going to feel like you're never going to make money, and you're upset, and maybe I should just jump into that trade. And then the pattern starts, guys. And once you learn this pattern, you'll have your limit order activated when the market's all the way over here. It starts with a reversal bar. Reversal bar is the beginning of the pullback. That small move counter to the underlying trend. The reversal bar is not your entry. That's a little loss of momentum that hopefully is going to get you to your perfect entry. When the reversal bar prints, you can define where these down bars are most likely to go using large and synthetic triggers. The red box is the range, most likely to retrace somewhere from the top to the bottom. I have no idea where from the top to the bottom it may go. I just know that that's the range. And then it's most likely to bounce from a fib, from a mid-band, from a yellow 1-to-1. The same way those areas could stop a trend on the large chart, they can stop the small chart, the small crowd. They can terminate that retracement, and they can create a bounce in the direction of the trend, in the direction of the momentum, in the direction of the clear path. So market's going up, reversal bar begins the pullback, define where the retracement is most likely to occur, and then remember that phrase. I'm going to buy a pullback at an area inside of triggers. Sometimes they're stacked. You may have a mid-band up here and 1-to-1s down here. Guys, this creates a window. Both of these have the potential to create a bounce. Both of these have the opportunity to ricochet the market, send it off with the large crowd. Because of the large crowd advantages, because they are screaming with nothing in the way, guys, you're going to activate a limit order at whatever area inside of triggers is closest to your reversal bar. We're not going to trip over pennies hoping they make it to the bottom level. Once you get beyond the retracement zone, I call it the wrong side of the triggers, guys. Once you get below the triggers, rule number 3 is no longer in play. That advantage is no longer in play. You no longer have an edge. And once you get below these triggers, you don't know if, when, or where the market is going to continue up. Any lines outside of the triggers should be ignored. And I want you to deem this area where the market should not go if this is going to be one of those winners. In a downtrend, everything is dropping and you're waiting for a small chart to go up. And it is counterintuitive, guys. And it's a little anxiety producing in the beginning. But once you get this reversal bar, or even before it happens, you'll know exactly where the market is most likely to retrace, somewhere from the bottom to the top of the triggers. You'll know precisely where the market is most likely to bounce and continue with the underlying trend. That is the areas, all caps, inside of those triggers. You're going to activate your limit order below whatever area is closest to that reversal bar. This is your high probability trend trade pattern, guys. This is your entry pattern. Reversal bar, define the retracement, pinpoint the bounce, activate a limit order. Retracement, pinpoint the bounce spot, activate a limit order, and anything beyond that retracement zone is where the market should not go. I don't know if, when, or where that market's going to continue down once I get to the wrong side. And guys, that is where initial stops are placed. Your ability to pinpoint precisely where the market is most likely to continue weighs heavy on your management plan, because initial stops are placed where the market should not go. Generally 4 or 5 ticks. I always choose 5 because really, what's a tick among friends? Guys, 5 ticks beyond those trigger lines. If the small crowd can push through the retracement zone, if they can blow through the areas inside of those triggers, guys, my advantage is gone. I don't want to be in that trade anymore. I no longer want to be in that trade. And I'm very willing to take my loss and wait for the next trade. Guys, this is a cost of doing business. Anything that can win 70 to 80% of the time has to lose 20 to 30% of the time. It's like paying rent. Good morning, Miss Cindy. But you know exactly where the advantage is lost, guys. And the cool thing is, in the plan that I gave you for Ninja Trader, once you get a confirmation bar in the direction of your trade, once you get a reversal bar down in a short trade, up in a long trade, guys, you're going to move your stop like 2 ticks above it. And it's not uncommon to see Nexgen users with $30 or $40 risk per contract in a futures trade, which is darn near unheard of. There are 3 ways you guys are going to enter the market as new users. And I know this because I've made every mistake you'll ever make. I have had every challenge you'll ever have, and I've learned how to fix it. So I'm going to share this with you guys. The first most common entry that I see on new users is just jumping the fudge in. I am so scared it's going to go without me. I'm going to jump in with that momentum and clear path. And guys, that's totally cool. It's a very valid trade. A lot of people make a lot of money with this trade. However, if that reversal bar prints, that's a loss of momentum. Guys, that's a great exit while you wait to see if it produces a trend trade. This one is very, very common, and I see people take huge losses because they keep their stop where the market shouldn't go. The second one, very common one, is when the market fakes you out on that 5-1, when they're trying to go down and a couple buyers fight and create a little push up, and your fear of missing out, your anxiety about missing the move kicks in, and I see you guys enter on the high tick of a bar that never even turns into an up bar, and the market continues right back down to the perfect entry. All you've done on either of these entries is really increased your risk dramatically, but more importantly, you have decreased the distance you have to trouble, which means that not only is the risk bigger, the profit potential goes way down. So the final one, and this one takes a little practice, learn your pattern, is the pullback to the area inside of triggers, guys. This is the one that will give you the least amount of risk. This is the one that will give you the highest profit potential. And this is the one that we're working on right now, that you're learning to study and to test. And you can study it without ever taking a trade, guys. If you go back on your large chart and you see momentum and at least that potential to break, one of these tails sprouts, circle that tail. If it's a pullback to an area inside of triggers, use the language. Pull back to an area inside of triggers, guys. This is your pattern. This is the one that you're studying. This is the one that if you go through the client trades here, guys, you can commit this pattern to memory in like a day or two. Because look, it's the same thing every time. First, it's momentum. Room to trouble. Pull back to an area inside of triggers. And then if I click on a different one, first it's momentum, potential to break, pull back to an area inside of triggers. Guys, it's the same checklist that I've been giving out for years on this one. Let's look at this one. This is the first one on the list. And it won't open. And it won't open. Here we go. Momentum, 3 triggers through, pull back to an area inside of triggers. Guys, this is from crude oil in the November contract 2021. We are in the December contract 2025 right now. It's the exact same pattern. So learn the pattern, guys. Learn the process. Learn the recognition and go study it on this spreadsheet, guys. Make sure that you know what your pattern is, so when the market is trading live, you don't hesitate. So when the market is trading live, you don't panic. So when the market's trading directly into resistance, you have no desire to be a part of that trade. Let's see if we can find one. This one looks like momentum, 2 triggers through, room to trouble, coming from a termination that reversed the market. And guys, there it is. Pulls right back to the support, doesn't get where the market shouldn't go, continues up with the momentum up to Fibonacci resistance. Do you guys see it? This is a great way to study. And if we scroll back and look for another, let's see if we can find one. Here we go. You'll notice that it takes 30, 40 minutes on a chart, sometimes an hour, sometimes 2 hours. 90% of your day is waiting, but when it's perfect, you will be able to capitalize, guys. You'll be able to take advantage of this pattern that's been repeating itself forever. You can do it on crude oil. You can do it on the S&P. You can do it on the NASDAQ. You can trade gold. The market doesn't know what you're trading, guys. The market only knows that when there is momentum, when there's either the potential to break or the clear path, it loves to pull back to areas inside of triggers. And there it is again. And look what the market did after, guys. With a little bit of management, you'll be surprised at what you're able to pull off. Any questions about the high probability trend trade, guys? Any questions about naming the indicators? Any questions about the idea that the trend is down and my triggers are down, but I don't have a clear path? Guys, once you learn the very, very basics, once you focus on those 3 rules, once you say to yourself, I have momentum, my path is clear, I can define my entry, guys, you have the best of the best. Once you say, I'm missing one of my advantages, but the other 2 are present, I'm going to manage it assertively, it's medium probability, I'm going to take quick profits, I'll get to a 0 loss level. And when you say, damn it, I'm missing all my advantages, or at least 2/3 of them, you may say, and this is hard to do, I choose not to trade. I choose not to enter that market. I choose not to hope that only an entry area carries me to the promised land. So guys, if you are one of my Ninja Trader users, what I ask of you, if you post in my room, define the momentum and draw an arrow. Tell me how you're reading your chart, because my job is to make sure that you're reading it correctly. Define your termination conditions, whether it is a termination, whether it's the potential, or whether it's a clear path. Tell me what you see so that I can make sure that you're seeing it correctly so you can embrace these advantages. And guys, when you take an entry, if you use that language, I bought a pullback to an area inside of triggers, you're never going to miss the good ones. Tell me where, tell me why. You can even tell me how you exited if you feel like you want to work on management a little bit, guys. So this is my only request of you guys. What you do outside of this is none of my business. But if you're going to post in my room for review, please tell me how you read your indicators, because my job is to teach you how to read your indicators. All right, quiet class. Here we go, TradingView. The other platform. TradingView is not NinjaTrader, guys. I can't stress this enough. TradingView is apples to oranges. It's different bar structure. It is going to be different entry rules, but the indicators are like 90% the same. Both charts are going to have trigger lines, guys. Both charts are going to have divergence highs and lows, 1-to-1s. They're going to have mid bands. What else are they going to have? TradingView will have outer bands, which are like points of exhaustion. And the difference is, the big difference is TradingView doesn't have fibs, guys. The programmers haven't been able to write it in yet. So we went to a company called Chart Prime, and they are the best of the best, and they create these supply and demand zones, and I'm a huge fan. I couldn't imagine trading without them. There are free versions if you don't want to pay. That's fine, but they will behave as fibs. Don't trade into them, guys. Areas of support and resistance. The bar structure is different. Your large chart is a 15-minute chart, guys. And I don't know, think about what you can get done in 15 minutes. That's how long it takes a bar to produce on this chart. And it could be a giant bar, it could be a tiny bar, it could be a bar that goes from area to area. 15 minutes is a long time. So your 15-minute chart will define directions, it will define momentum, it'll define key targets, and it'll define terminations, guys. 15 minutes, it does the work. It sets the tone. It leads the way. Your small chart is a 1-minute chart. And guys, try to hold your breath for 1 minute real quick. Feels like a long time. When you purchase, if you are an owner of Shadow Picks, you have access to both. Absolutely. You're paying for indicators. So 100%. Yes, sir. Your 1-minute chart, guys, this is the immediate strength of the market. Your 1-minute chart will have small and large triggers. It'll define entry points. So if the large chart doesn't give you what you need, learn to ignore the small chart. It literally is the siren song. You will go crashing into the rocks. And just because it's TradingView, it's no different, guys. You're still not in charge. Large chart leads the way, large chart wins. Small chart is to get you into the market with the least amount of risk. So, reading the large chart, direction. The trend is your friend, guys. Oldest cliche in trading. On your large chart, in the plan that I give you, there is the link. There it is. There is a link, sorry, scroll, for the very minimal workspaces. It's also, if you go to the website and you go to the instructions and down on the workspaces, guys, there is, oh, maybe it's on the other one. These are your bigger, all the indicators workspaces. And then below them from the nexgent3.com site, I do believe you will have, dang it, I didn't know where it was. Now I'm just like not looking as smart as I wanted to look. It'll be available, or you can just pull it right off of here, guys. No large triggers on your 15-minute chart. It's too slow. It's like waiting for a glacier to melt so you can have a sip of water, guys. So it's only the small triggers. And the small triggers will define direction. They are either up or they are down. And if you can't tell, if you're like, man, they're waffling. Hey, what's up, Marky Mark? If they're every time it moves a tick, they go up and down and flat and up and down and flat. Guys, if you can't decide the direction, neither can they. Wait for it to be decisive. And small triggers tell you which way you're looking for rules to be met. Once the small triggers are either up or down, I want you to ask yourself, where is the current price in relationship to those triggers? So here they're up, and here I've just blown it up a little bit. There's your small triggers. And there's three options where the most current price could be. It could be left of the triggers, it could be right of the triggers, it could be inside of the triggers. And guys, on the 15-minute chart, in one bar, it could be left of the triggers, it could be right of the triggers, it can be inside of the triggers. So we're looking for the most current price where the market is trading in the moment. If you are left of the small triggers, guys, you're on what we call the strong side. This would be odds favorable momentum. This is your best look. This is the look where 1 minute areas are most likely to break, where bigger moves happen. If you are right of the triggers, you're on the weak side. And guys, that should get your guard up. On the weak side, 1 minute areas are most likely to bounce. This is where profits are taken quickly, where getting to break even becomes imperative. And then when you're in that transition, you're neither strong or weak. When you're right inside, and guys, this is where you're going to be aware. You're going to say, okay, I'm coming up on an area. I'm not going to risk money anymore. Or I'm going to take partial profits. I'm going to make sure that I've got something in the bank because it's got the potential. I'm ready to manage. So the market is going up. The market is on the strong side. And now, is there room to targets? You're going to see today, dollars to donuts. You will see today in this room, TradingView losses. Trading directly into areas. Trading directly into things that could stop the market. Trading directly into zones, into one-to-ones, into VWAPs, into mid-bands, into outer bands. All the things that you know about long before you get there is the most broken rule on either platform, because it's going to force you to sit still. It's going to keep you out of the market. Once you have room to targets, guys, and if you can't answer yes to this question, don't bother with your small chart. But if the answer is yes, it's time to look for a trade. Your first trade, your least common trade, is what we call a momentum trade. And embrace the name, momentum. I can't have a momentum trade if I don't have momentum, right? I can't have chocolate cake if I don't have chocolate in the cake. It's like turkey bacon. It's not. It's turkey. It's just made to look like bacon, guys. Momentum trade. No terminations or zones on the 15 minutes. Room to targets. It will always be the most important thing. 15 is on the strong side. 15 minute strong side of triggers. You don't have the advantage of the best momentum if you're transition or weak. And then the 1 minute must have strong triggers as well. It must have that separation between small and large, that gap with everything going the same direction. If these first two rules are met, your entry is using a limit order to buy or sell a little pullback at an HVA or an area. And it looks like this. First, the smalls are up. Then it is the strong side of the smalls, meaning it's left, and there's absolutely nothing in the way. And guys, if you can't answer these three questions and finish with nothing in the way, don't go to the small chart. You're more likely to lose. What the momentum trade is first a zone, an area it must break. Resistance behaves as support when it does. And not peek its head above it, but rather pull away from completely. And then as it pulls back to that zone, to those one-to-ones, to that HVA line, you're going to wait with a limit order. And you have to have strong triggers, and you have to have room to trouble, and you have to have room to trouble. And guys, this is the only trade that uses a limit order for entry. This is the only trade where you will wait for the market to come to you, and your stops are minimal, because all it is momentum, and you're hoping momentum carries. These are typically 2 to 3 ticks below the zone that gets you in. They're very low risk, but these only happen about 15 to 20% of the time during the trading day. On a short, strong side, room to targets, the area breaks, pulls back, you are in with a limit order right at that area, stop just above it, and you are literally hoping momentum continues to push the market. Does that make sense, everybody? First, it's strong side, nothing in the way, break and pull back, giddy up, let's go. Now here's the one that you can build an empire from, guys. Here's the trade that's going to happen more often than not. This is the one, and I love it because I'm an anticipate entries kind of guy. It's my downfall. This one forces me into patience, guys. And it starts with, you got it, nothing in the way. Nothing on that 15-minute chart. No areas, no zones, no one-to-ones, guys. And then your 1 minute, not trading directly into areas. Have I ever mentioned how important a clear path is in day trading? I should add that into the room. Now here's your entry. And it sounds familiar. I'm going to buy or sell a close on the correct side of small triggers at a 1 minute mid-bander area, which means I'm going to wait for a pullback to an area. So when the smalls are up, it's transition. There's room to targets. The large chart told me go look for an entry. Guys, the moment my small triggers turn against me, not like revolt, right? But just go from up to down, pinch and roll. The moment this happens, there are absolutely no momentum trades to be had. None whatsoever. Can't do it. Momentum is gone. The immediate momentum is now against you. You're going to look lower in a long trade. You're going to find an area, one-to-ones, mid-bands, zones, and you're going to say out loud, because my small triggers rolled, my rules say wait for a pullback to an area with a close on the correct side of the triggers. Guys, they head faked you, not from an area. Once again, learn the language. Pull back to an area. It's a very key phrase. And then you're waiting for an up bar. A bar in the direction of your trade, but not just an up bar that closes on the weak side of those down triggers. We just call it the correct side of the triggers for the trade. And if you go back on TradingView and all you do is look at how many times the market changes direction with a close on the correct side of the triggers, you start to believe in this trend trade. And then when you add an area, you believe in it even more. And when you know the large chart says it wants to go up, you can't wait to take this entry. Guys, this is going to be your most common trade. In a down, smalls are down, strong side, room to trouble. The moment my small triggers roll against me, momentum trades are off the table. Have to wait for a pullback to an area, have to get a down bar closing on the correct side of the small triggers, have to enjoy the spoils of my trend trade. And guys, that's TradingView. Are there any questions? I've already given you guys the plan. I'm going to do it again because now we've talked about it all. I'm going to give you the trade tracking sheets and I'm going to give you the plans for both platforms, guys. I'm going to drop them in the room right now. I would encourage you to download the one that goes with whatever platform you're using, to keep it simple, to keep it focused. Guys, to speak in terms of advantages every time you look at your chart. And now I'm going to recap. We have learned the trigger line, the Fibonacci rules, for when it's okay to take a trade. And it's okay to take a trade when the rules are met, because hopefully you will prove that your rules win more than they lose. I was talking to a buddy of mine yesterday and he sent me a video on meditation, trading, being in the moment. And one of the things that the guy that he sent said that you have to trust your plan. You have to trust that it provides an edge. You have to trust that it wins more than it loses. And the only way you guys are ever going to trust a plan is if you go back and test it and practice it and take pictures of it and make mistakes to learn. So you've got rules. You've got the ability to get feedback on everything you do. Guys, Michael Jordan has a coach. Wayne Gretzky had a coach. Serena Williams had a coach. Tiger Woods had a coach. The whole damn Patriots had a coach. Guys, multiple coaches. People that stand on the sidelines, watch you do what you do, and then give you feedback to do it better. That's my job. My job is to take your greatness and make it greaterness, I suppose. So you've got rules, you've got plans, you've got everything that you need to be successful with the software, guys. Now it's up to you. Are you going to put the work in to make these look easy? Are you going to ask for the help to make sure that you're not making mistakes and misreading your charts? That's on you. I can't control that. But if you do it, if you follow this simple plan, post in the room, use your spreadsheet, guys, you are more likely to find success sooner than later. Are there any questions about the idea that even with momentum, my rules say don't trade directly into Fibonacci support? That's a termination condition, guys. 100% textbook. This is an area that could stop the market. I'm going to wait for the reaction before I look for a trade. No clear path, right? Price is on the wrong side, guys. This is what we call a strong trending market. When you get 30 bars in the same direction, look where it started. This is a market that is railing. You can say that momentum is good. And you could say that it is a clear path. All the triggers are above resistance. It's pulling back to those areas of support. The one thing you can't say is that you have an area inside of triggers, guys. and you're on the wrong side of the triggers. And if you got in at support, you got run over. And if you got in at the next support, you got run over. And the next, and the next. And guys, once I get to the wrong side of these triggers, I don't know if, when, or where that market is going to stop. Once you believe that, you're going to find yourself missing an awful lot of losers. Trading view. My small triggers are rolling down. I would be on the strong side if they choose to roll down. And as long as I'm below the zone, I've got nothing but room to the downside. Now my small chart has a bunch of stuff in the way. Guys, this is one of those times where if in the next 14 minutes this bar ends up here, these triggers will not have rolled. So while they're threatening down, there's nowhere to go. I'm in a zone. I got nothing but zones. I don't know if it's going to go up or down. I have no idea. Guys, my highest chance of success will come from sitting on my hands doing nothing. All right. I am going to take 5 minutes, guys. When I come back, look at that. Don't know if, when, or where. When I come back, you guys let me know if this broke. I'm gonna go into management real quick, and then we're gonna look at the pictures that are posted, and then we're just gonna watch the live market, and we're gonna talk about the chart reads, guys. And if the rules are met for a trade from the plan that I provide you, we'll simulate it, we'll practice it, we'll pull the trigger. It'll be a lot of fun. Go stretch your legs, guys. I'll be back in 5. Second hour. So before we get into reading your charts, guys, I want to go to the KISS plan, high probability trend trade, and I want to talk about management of that high probability trend trade. Guys, management is where money is made. Management is where great entries pay huge dividends. And in the KISS plan that I've given you, management is very pragmatic. It's very if-then. And if you look at the spreadsheet that I gave you, this is the management plan that I'm about to go over, so you can go back and study the pictures and read the words. Your management plan is based off of 2 contracts, guys, and I think that this is important for new users because we're going to use both contracts for different purposes. The first contract is going to teach you guys how to get paid. It's gonna help you accept that every trade doesn't have to be a home run, that base hits do pay bills, and that honestly the goal of trading is to put more money in the account than you let fall out. So a willingness to get paid goes a long way. And the second contract initially is just teaching you to get paid as well. But the second contract, when you have money in the bank, is what's going to help you feel confident, holding for those bigger moves when the indicators tell you to. So the KISS management plan, first is designed to help you trust stop placement and get you focused on being paid. And now here's my favorite phrase. The same way the plan is a stepping stone, guys, the same way the plan is designed to optimize your chances of success, this management plan is not the only way to manage a trade. You will craft a plan tailored to your personal goals based on your experience reading the indicators. There's no doubt in my mind you're going to find bigger, better ways to do things. This one is designed to optimize your chances of success. There's a phrase in trading, or an old adage, or whatever you want to call it, that says that great traders manage trades or manage risk before they ever manage profits. Maybe you've heard that before. I want to remind you guys that you are already managing your risk by making sure that you have momentum on your side. And you're already managing risk, making sure that you have a clear path. And you are already managing risk by taking amazing entries. And then once you take that great entry, that's where the active management comes in. That's where an awareness and managing the trade shows up. And I don't give trading advice. I've never given trading advice. I refuse to give trading advice. But I will encourage new users to let this play out. Get used to losing trades. Guys, it's important. It's a big part of trading. Get comfortable losing the correct trades. Guys, get okay with stops being hit. But this is going to make sure that if your stop gets hit, man, they had to work for it. They had to come get you. So if your entry is 2 ticks below resistance inside of triggers, that phrase that gets you in, then your initial stop is 4 to 5 ticks beyond the triggers. This is where the market should not go. You will know your risk before you ever enter the trade. And you have to be okay with that risk. And this is a big part of it, guys, because if you put your stop in the retracement zone, if you put your stop near an area inside of that retracement zone, there's a good chance that it's going to get hit and the market's going to run without you, and you're just going to sit there feeling left out again. So stops where the market should not go. Targets will be predefined at $100 and $200 in the KISS plan. Leave them in place. So if I enter, then this is where my stop goes. If then. If my stop doesn't get hit, then I got a reversal bar in the direction of my trade, and we will redefine where the market should not go. New stop is 2 ticks above that reversal bar, guys. Your initial stop was $150 per contract, 15 ticks above that entry. Your new stop with the confirmation bar is only $30 of risk per contract. Great entries create manageable trades. And it doesn't guarantee a winner, but what this does is it guarantees a much smaller loser, which is important. Targets are still hanging at 100 and 200, and there is nothing to do. You're either going to get stopped out or it's going to go to your first target, guys. More often than not, it's going to go to your first target. I see people take such great entries that it hits the first target on the reversal bar, which is even better. Because once it gets to your first target, one contract is automatically removed, guys. Those funds go into your account. You're a winner. You just won a trade. Your palms aren't as sweaty. Your stomach's not as nervous. Your heart begins to slow down. And with one contract remaining, you're going to go to break even. You're going to take all of the risk off of this trade. And notice that it doesn't say where the market should not go. Because guys, you are right where the market should go. You're right at an area inside of triggers. But that break even stop for the second contract is going to give you courage. It's going to give you the ability to hold on, to wait for that second contract. And guys, when you have absolutely nothing to risk, it's easier to let it run. And it reminds you that the only reason you entered in the first place is because of all that momentum and that clear path on the large chart. So you're either going to get stopped out break even. And guys, if you're upset about a $100 trade, we got to talk. But more often than not, it's going to go to the second contract. It was only $200 away from your great entry. And guys, that's a $300 trade. That's not a $300 day. That is $300 probably from 5 to 7 minutes of your life. That is a $300 trade that you may have waited for 45 minutes. But guys, if the best you do every day is $300, if you shut it down at $300 every day, that's a $75,000 year. And I would wager to say most of the people in this room are not collecting $75,000 a year with their day trading. Learn how to get paid. Once 300 is easy, guys, 400 is easy. 500 is easy. 800 becomes easy because you begin to trust the idea that you can trade with an edge. And a $300 trade, guys, a $400 trade, get that copier working. $400 a day on 5 accounts is $2,000 a day, guys. That's a $500,000 a year from the same easy trades. It's not more trades, it's better trades. So that's your KISS plan. Management for the high probability trend trade, exactly where to put your stops, if then, very mechanical. Now, TradingView. We're going to go through TradingView management. And guys, I really do. I repeat the same stuff all day long. I've got TradingView management, I want to say on a PowerPoint. Let me find it. There we go. And this isn't the only way to manage, guys. Management's very individual. But TradingView management is derived from your large chart read. Specifically, where price is in relationship to those triggers. So this is going to tell you how you should be looking to get paid. Are your areas most likely to break, guys? Are you getting paid in an area and going break even with the second contract? Are you taking all of it off in an area, guys? So you've got to learn this read to really confidently manage your trades, and this is going to be up to you. I can't tell you how to manage your trades. I won't tell you how to manage your trades. But what I will do is I'll tell you how aggressive and assertive you need to be through your chart read. For trend trades, the market goes up, the market goes down, creates a pivot. Your initial stop for trend trades will go above the pivot high for a short trade. This is where the market shouldn't go. You've already gotten a close below the triggers. It started in the other direction, guys. That's where the market should not go. And again, you have to be okay with the risk. In a long trend trade, it's the exact same, guys. Where the market shouldn't go, it's going to go below that pivot low. And this is initial stops. This is helping you pinpoint where the market shouldn't go. Now, if I'm on the strong side of those triggers, guys, and I'm holding for bigger moves, this is where I can use those pivots to move my stops during a move. As the market continues down from the high pivot, creates another one, a new stop. Goes down, comes up, creates another one, a new stop. Goes down, comes up, creates another one, a new stop, and you can literally follow a market that's going with the trend from the strong side of the triggers. This is a great way to lock in profits, to put the stop where the market shouldn't go. Other direction, you're starting below. As it creates pivots up, you can chase it with your stop placement, guys, locking in profits, but locking it in an intelligent spot at a point where the market should not go, because they have already tried and failed. So that's one way you can do it for bigger moves. On momentum trades, stops are placed 2 to 4 ticks above the zone expected to hold, guys. These trades, these momentum trades, here's a great example. When they fail, they typically turn into trend trades. There's no reason to put hundreds of dollars of risk on a trade that is rooted solely in momentum. So 2 to 4 ticks beyond. 2 to 4 ticks beyond the area you're anticipating holding. These are initial stops where the market shouldn't go. Other things to think about. Sometimes you get in late into a move, you're getting above trouble, you're above all the zones, guys. Get behind what you're expecting to hold, right? If I'm saying to myself, this zone based on this look should hold, I'm going to hide behind the zone. Maybe I don't go below the pivot, but I've got to make sure that my rules are met. As zones break, hide behind the zones, lock in. It's okay, guys. You can always take another trade. And then I'm not going to give you guys this one. This uses bar patterns that are a little more advanced. I'll give you guys the PowerPoint. You can go through it. If you have questions about using HVA areas, let me know. But it's a little advanced for the brand new user. So now we have entry rules and we have stop placement rules, guys. And that's pretty cool, because in order to be successful, you have to know exactly why you'll enter the market. And if you really want to find success, you're going to know why you would exit. Why would I get out of that great trade? And now we're going to go through, and I'm going to start clicking on the pictures that you guys have posted in the room. And we're going to talk about momentum, path, and entry. We're going to look at the plan associated with the platform. And guys, I'm not going to play the trade police. I encourage you to not play the trade police. We're just going to look at momentum, path, and entry, guys. We're going to talk about the great stuff. We're going to talk about reads that maybe weren't the most accurate, entries that could have been better, management that may have had a little less risk. And that's all we're going to do, guys. And it's your annotations that are going to tell me how you read the chart. Stepped out of the room. This nice trend trade appeared. 15-minute, pinching short, weak side, clear, 1 minute, odds favorable momentum, areas nice, just enough room. Trading directly into areas. So if you took the momentum trade, you had room. If you took the pullback, you broke the odds favorable momentum rule on the large chart. Hindsight looks great, doesn't it? Hindsight, it looks great, but there's your trade. You've already reached the target. The small triggers are rolling, right? It came up. Maybe it's coming back down. And I'm assuming this is where the trade was taken, with those triggers not giving you much directly into an area. Guys, when you come back historically, you feel like a rock star. Man, I could have made all the money. Were your rules really meant to trade directly into an area from the weak side of triggers that we're trying to roll up? Probably not. But this makes you believe that it is. So remember, when you go back historically, play were my rules met, not could I have made money. There's another one. There's your close below, right in. But the real one, it clears, right? And now with the triggers down, with room to trouble, that's your easy one, Paul. That's the one that's rooted in advantage. That's the trend trade that gives you the best chance of success. You can play trade police on your own. I want you guys to. All right, 15 down triggers, weak side, not clear, into the VWAP, didn't register as there. So you went long against down triggers, Paul, and you lost. You went long directly into areas, and you lost. Does that make sense? You didn't follow direction. You didn't have room to targets, and they took your money. That's avoidable losses. that is avoidable losses. Room to targets, guys. I told you you would see trades directly into areas that don't win. Let's see. Small triggers are down. You're in a zone. There's nowhere to run. So you go long and get out break even. You go long directly into it, lose 4 points. You go long again, lose another 4 points. And one more long, and that one runs. And every one of them, oh, so you went short. These are all shorts. Everything is up. You went short, lost a tick. There's your close below. Lost 4 ticks. Still a close below. Lost 4 ticks. There's a close below. Lost 2 ticks. Into 1-to-1s. Into 1-to-1s. Into 1-to-1s. Into 1-to-1s. Right? And you never put your stop above the high. So that's 4 trades into trouble. Not one of them produced money. So there's this thing that happens. Guys, if you use your trade tracking sheets the way it's intended to be used, if you use the trade tracking sheet the way that I hope that you'll use it, what you'll do is you'll look at the feedback. And Paul, this was a glimpse into my world because it looked exactly like your world. Into a termination, into a termination, into a termination, into a termination. And eventually, what you have to do, what you have to say, is that trading into areas does not serve me well. I tend to lose, and I would say 80% is fair, of them. And how many of those can you do before it sucks so bad that you stop doing it? Paul, my answer was about 1,000. Trading into areas was my biggest problem. Trading into areas was the biggest reason for me to take losers as a brand new user. And it took John Novak telling me the same thing over and over until he finally said to me, Mark, how many times are you going to trade into areas and lose money before you get sick of it? And it just resonated. And then I started going through that thing. And Paul, I put on my desk in Sharpie, big, black, bold, don't trade into areas. And eventually I broke the habit. And every trader has a thing that robs them of success, guys. Every trader has a thing, whether it's an early entry, whether it's trading into zones, whether it's fighting triggers, every trader has a thing. Your thing, Paul, is trading into areas. It doesn't serve you well. Triggers are down. You're in the zone, which means that there's just nowhere to go. None whatsoever. You take a long trade against the triggers in the zone, and it stops you out. It just doesn't go anywhere. Just doesn't go anywhere. It has nowhere to go. Does that make sense? You said that the triggers were short, but you went long. So you're not listening to your great analysis. The one thing that you're missing is when you're in one of these zones, that's where this happens. That's where consolidation, that's where sideways movements, guys. You're literally stuck in a zone where they don't know what to do. Room to targets, fighting triggers. And then you go long. Nope, that was your short. Nowhere to run, directly into a mid-band. Mid-band holds, takes you out of the trade. Where did you get out? I don't see an exit. That was the close on the correct side. 84. Okay, so that wasn't an actual trade. But Paul, let's do it one more time. Let's do it one more time. Is that the trade that you win more than you lose? Directly into 2 zones in HVA? Not at all. But here's the cool thing. With these triggers up, with price getting above trouble, Paul, can you take a breakout? Can you say this was my trend trade, but it doesn't have room? Let me get above trouble with that large chart look and see if I can't ride that trend trade up a little bit. It's that patience piece. It's that little bit of, you know what? I'm going to get in on my terms. I'm going to get in not into an area. I'm going to wait for this nonsense to break, because with a trend trade look, it's more likely to get up to those one-to-ones. It gives me room to targets, and I can just hide right behind the zone. My small triggers are up. I'm not fighting anything, and it's that little bit. But if you're basing it on what happened after the fact, of course you're going to say I should have traded into an area. Of course I should have traded into an area. Look what the market did. But more often than not, the areas stop it. The areas stop it. The areas stop it. The areas stop it. Pretty cool, right? Beyond trouble. Clear path. My favorite picture. This was given to me by Morgan probably 2 years ago. Paul, I want you to burn this image into your mind. That's you trying to trade into areas. You're on the other side. You knew it was going to happen. Read the license plate, right? Guys, this is what termination conditions do for you. They will break. They'll break just enough to make you believe you should trade into them, and then you're going to go live, and then life is horrible, right? Everything is up. You like the trend trade setup, but it was into zones. And Paul, the one time you actually have room to get up to trouble, the one time you've got a gap between the entry and a zone, you ignore it. You choose not to take it. Everything is up. Everything is strong. The path is clear. And the one time you have room to get to the zone before you have to manage, you skipped it. Do you see it? That's perfect. Your close was at 01. You had like 4 points. And here's why. If assuming that your brain works anything like mine, Paul, this market sucks. This isn't any good. That's not going to work. This is crap. I'm so mad. And then when it's perfect, you're so beaten up from taking the wrong trades that you skip the right trade. And we've all done it. Every one of us has done it. Same trade. Everything is I know. There's an old saying that says there are no original thoughts, only obscurity of reference, guys. We're all coming from the same reference material. Everybody makes these mistakes as a trader. But Paul, what you're doing by going through, by annotating, by talking about it, by speaking to it, you're gonna beat it. You're gonna beat it because you're putting the work in to beat it. Victor, triggers up, above trouble. You get a pullback to a zone and a break above. It's a good look. It didn't work, right? It just didn't work. They wanted to go lower, and when they went lower and broke above, Paul, there's your entry. You take it, and outstanding. Great looking trend trade. Nicely done. 245 gain. And when you're on the strong side of the triggers, these areas are more likely to break, and they did. Nicely done, Victor. Welcome back. Pete. No annotations, Pete? Hold on. I know you wrote on it. Smalls are down. Strong side of the smalls. You just jump in below trouble. There's your breakout. Gives you room to trouble. You get paid, and then you get paid again. Nicely done, Pete. Momentum and path, guys. Momentum and path. Master B. Triggers are up. Pull back into the synthetics. So this was your trade right here with momentum and path and out at trouble. Nicely done, Master B. Nicely done. And then Pete, momentum and path. Momentum and path. And I almost missed one. Everything says up. There's absolutely nothing in the way. Pete says, I like that look. I'm just going to jump the fudge in. And I'm going to get paid halfway there, and we're going to see if they go to the next one. Nicely done, Pete. You guys are killing it. You guys are killing it. Triggers up, transition, nothing in the way. And then there it is again, guys. You guys taking this breakout trade. There's your trend trade right there. That's your trend trade. Had room. Oh, didn't have a lot of room to trouble. I'm not sure what your blue line is. What's the blue line, Andy? I don't see it coming from any areas. I just see a blue line. That looks like the perfect entry. And then you wait 3 points, almost. Remember to delete these lines that you guys draw in on areas, or they'll talk you out of stuff. There's nothing there. Your entry was right here. Beautiful. You take the breakout, and you still make 140 bucks a contract. Nicely done, 280. But man, that could have been a much bigger move. Oh, there it is, VWAP. Thank you, Jen. It is, it's a VWAP. Thank you. I didn't even see it. So you get above the VWAP. Take the breakout. Nicely done. I didn't see that. Thank you, Jen. I got focused on the blue. I missed the white. Andy, this is awesome. And then Paul, see how he just said, let me get above trouble with all that strength, giddy up? Guys, I don't teach a breakout trade, but I sure do see a lot of you guys doing this well. Nicely done. And then triggers are down. Strong side of the triggers. Room to trouble. You took an entry. It just never broke. So guys, this is a good lesson. Are you ready, Andy? I want you to see something here. This trying to get in just above had odds favorable momentum. This trying to get in just below had smalls above the large, no momentum whatsoever. Do you see the difference between the two? There's a huge difference, guys. If you're going to try that breakout trade, have momentum on your side. It'll give you at least a fighting chance. This area had already held 1, 2, 3, 4, 5, 6, 7, 8. We were on its 9th shot where they couldn't seem to get through this area. Somebody knew about it. And it just didn't work. And that's a 3 lot, and that's an $870 loss. And can we agree that that was an avoidable loss? That's a loss that didn't need to happen. Let it break, guys. Let it break and pull back. It's crazy how those simple little things pay huge dividends long term. Because when support breaks, it becomes resistance. And Andy, for me, just something to think about. I don't have management for the jump in, hoping to break out. But if I'm entering here and they get back above that zone that I'm hoping holds, you could make that pretty low risk, without a doubt. You could have taken about 16 ticks, about $160 per contract off. Just saying, man, if it doesn't run, that's where I quit. That's where I give. Good stuff. Good stuff. Guys, that's all the pictures. So let's see what's going on in the wonderful world of NinjaTrader. Smalls below the large. Clear path. If you pulled back, oh, look at that. There were no areas inside of triggers. Do you guys see that? You brand new users. If trigger lines define the retracement zone, whoops. And areas inside of triggers define the most likely spot for a bounce. Do you see how the rules weren't met on rule number 3? And you don't know if, when, where the market's going to stop and go down. Does that make sense to all my NinjaTrader users? My large chart looks amazing, right? Every trigger is below. But the challenge is, how do I define entry? How do I define an entry when there's not an area inside of triggers? I'm going to give you guys a little secret. I love sharing secrets. Guys, if the large chart is perfect and I can't define where my entry is coming from, do you guys remember that a reversal bar is the first move in stop placement? And once you get it, you can put your stop behind that reversal bar? Guys, when the large chart is perfect but the small chart isn't, there are a lot of you that will wait for that confirmation bar, will put your stop just above it, because if your initial stop goes here, 4 to 5 ticks above where the market shouldn't go, entries don't come from there, not high probability entries. You can use that down bar and it gives you stop placement, guys, and it gives you room to get to trouble. Does that make sense? I'm not telling you to break your rules. I'm telling you that when this chart is perfect, sometimes you got to force the market to go in the direction when you can't define your perfect area. Good stuff. 3 triggers through. There was your first pullback. There's your second pullback. You guys see these divergences printing? Divergence is a loss of momentum, guys. And if I'm relying on momentum to break this area, I can see that I'm losing it more and more. And if this divergence is true, I've even got a termination condition. So, not a clear path. And let me show you how this works. If the recipe for the perfect trade, I haven't done this one in a while. Miss Kathy, this is for you because Miss Kathy puts this on her chart every time. If the recipe for the perfect trade is momentum, path, and entry, guys, starting on the large chart, does everybody see the momentum? Small's below the large. Guys, if you're a NinjaTrader user, this is going to keep you out of a lot of trouble. I have all the momentum in the world, but I don't have 4 triggers through, which means that I don't have a clear path. Does everybody see how I'm already down? 33% of my advantages are gone. Sure you do. Divergence is a loss of momentum. I'm starting to lose momentum. And Snagit is not wanting to work. A second divergence is a second loss of momentum. So now I don't have a clear path. I've lost most of my momentum. Guys, we're literally watching this trade fall apart right in front of us. And then there's your third divergence, and look what it does. Look how it pushes up higher. Look how it doesn't work out. And guys, that's one of the things that you can do if you keep it simple, if you keep it focused, if you focus on advantages. When they're present, it's time to trade. When they're not, it's okay to relax. And for that potential to break trade, guys, it's called a 50-50. It needs a strong top or bottom on the large chart. It needs momentum on both charts. No divergence, because divergence kills these trades. And divergence killed that trade. And now, if you're going to look for shorts to go at the large chart, you've got to let the small triggers roll on the small chart. You've got to get them back in the direction. John, busy day, lots of work, so going to pop in and out with one chart. Time of entry at zone on TV. 15-minute with target, the aftermath. So let's look at it. You went short. Small triggers are down. You're below trouble. You have room to trouble. And sure enough, with the down triggers, it made it to trouble. And that's a 15-minute chart. So that's a big move, John. Nicely done. So John exercised his right No one can predict the market. You disagree. You can predict it. It just doesn't always come true. That is true. That is true. It doesn't always come true. But you can give yourself an advantage. You can give yourself an edge, guys. All you have to do is start to recognize that pattern. And Trader Ed, I just saw your message right now. Give me a minute and I'll type a response. So guys, from the prop firm, and let me give the link real quick, and sorry I missed that, Ed. Once I get talking, I don't always focus. New users can get a free $50,000 account, guys. Free 50 right there. If you've never been with the prop firm, guys, that's it. That'll get you. And Trader Ed, I know you're using Sierra charts. I don't have any experience with that. And I don't have indicators for it. But you and a friend are considering switching over to TradingView. It is browser based. I'm a huge fan. It is stable. It is 100 million users strong. And man, I have a plan already in place to teach you how to pass that one. It's a probability game. Amen. It most certainly is a probability game. So let me know how I can help, Trader Ed. Let me know how I can help, please. And I'll respond to you in the message in a little bit. But that's it right there. Free 50, guys. New users. Go take advantage of it. And man, I'll tell you what. My funded traders, people in the semi-live accounts, has been going up exponentially lately. You guys have been doing great things. Great things. All right, so let's do our reads. You ready? We're just going to go through it. Small triggers are up. Large triggers are down. Does everybody remember that if the colors don't match, you don't have momentum? That if the colors don't match, rule number one's not met. That if the colors don't match, the odds are not favorable for the market to push down. And guys, that's it right there. And if we're reading this chart, looking for a trade, we have to say that there is no momentum. It doesn't mean that a trade's off the table. What it means is that I'm going to lean on these other two advantages, like my life depends on it. And I've only got 3 triggers through a couple areas, which means that I also don't have a clear path. And guys, the hardest thing you will ever do is say to yourself, with no large chart advantages, I refuse to look for an entry on this chart. Hardest thing you will ever do is not let the small chart seduce you. Does that make sense, everybody? I don't have momentum. My path isn't clear. 66%. Should it be a Visa card on the purchase process? I don't believe so. I don't think it has to be Visa. That's a good question. I've never been asked that question. John Novak, are you still in here? Let me see if I can get an answer for that. No, I'm not done trying. I will get an answer for you. I will get an answer for you. No, that is a complete scam, Master B. 100%. 100%. Complete scam. So delete it, report it. Big Rat, you go to nexgenprotraderfunding.com. You go to evaluations. You go to 50,000 account. You start an evaluation, and you'll have to create um, you'll have to create an account. You'll use the code to get it. But if you're not on TradingView, guys, you can't use this on NinjaTrader. NinjaTrader is not an accepted platform. So if you're curious about what platforms are available, the instructions, supported platforms, guys. TradingView is the one that I teach on. TradingView is the one that we have indicators for. But all of these, knock it out. Make sure that you have one of them. I got you, Organic. Give me just 1 second. So Big Rat, that'll get you, and it will literally talk you through the whole process. It is step by step by step by step by step. Starting your evaluation, connection guides, everything that you need. And then if you can't find what you need, there you go. We got people on standby for you. And then Paul, this is where I get into trouble. You look at John Novak's trades, you like it, 15-minute free and clear. 1 minute, there was a mess of areas in the way. Ignored them and blasted through. I wish I had a nickel for everyone that's blown out an account trying to do what John Novak does. He shows you one chart, Paul. He doesn't show you everything that he's looking at. He doesn't talk about everything that he's looking at. And John Novak makes it look easy because John Novak's been doing it for 30 years. Guys, don't try to mimic him, please. And Yassine, it is great to have you here. I'm Mark. Nice to meet you. Let me know how I can help you, please. Don't be shy. Guys, this room is designed to be a conversation. It really is. It's designed to just be a discussion, not a lecture. Absolutely. So Organic, you want to get rid of the background colors? So trigger lines define the colors. So go to your trigger lines new and go to settings. Are you running the large triggers, Organic? Oh, NinjaTrader? I'm sorry. I did that wrong. Here we go. So right click on NinjaTrader. Hey, I am old people, Jeffrey. Go to your indicators. And then under the indicators, same thing. We're going to go to the trigger lines. T3 trigger lines. And I'm going to scroll down, 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 down. And then right here. So let me give you the big picture. So it's indicators, trigger lines, and then it's this bad boy right here. You can make those any colors you want. Let me give you the picture in the room, and then we'll do it real quick. So I can make them whatever I want. I can make them chocolate, gray. Guys, we could go deep pink and just feel pretty while we trade. Whoa, that's hard to look at. Actually, that's kind of cool. That makes me miss the 80s. But it's literally giving me a headache. So I'm going to change that again. One thing, guys, once you understand momentum and stuff, you don't have to have the green and red backgrounds. They don't even fit into the rules, to be honest with you. I'm going to do this. I'm going to right click and I'm going to load a template real quick, and I'm just going to reload the 13.2, and that should put me back to green and red. So, but once you understand that the only way you can have strong triggers down is with this look, do you really need the red background? Do you really need the green background? Because the rules don't say with a green background. The rules say that for them to be strong up, they got to match one another, right? For them to be strong down, it's only one look, and they're always going to match one another. So you guys change them all you want. Have some fun with it, right? Make it exciting. Look at all the nonsense. Decisions are made at areas. You guys are doing great today. I love it. Let's look at John Novak's trade. All right, where was it? So, Paul, do you want to see what he did? That's where he went short, right? It was one of these two where he went short. It's that white bar breakout pattern. Go watch his video on it. That's how he did it. Hey, what's up, Onofrio? Good to see you. Odds favorable momentum. Waited for the triggers to get below the fibs. You did get in on the pull up right at the area and the triggers. You gave it enough room to breathe and cranked that bad boy all the way down to trouble. And didn't get out until they gave you a loss of momentum. Hard to find something wrong with that trade. Hard to find something wrong with that trade. Nicely done, man. Momentum and path. You take the entry, you hold your stop, you get paid. Nicely done. The white lines, it depends on which lines you're talking about. Are you talking about the white lines off of the bars here? Yasin? Are you talking about this white line? Cool. So these are not EMAs. What these are, and let me make it really big so that we can show you. These are called high volume areas. And it's a visual of where the highest concentration of sellers or buyers are within a bar. And this is the market flow. And what it does is we use these because when you get one of these white bars down and it is confirmed with another down bar, it'll literally print a magenta line, the highest concentration of sellers. And there's a trade that we have, and I don't think this one came back to it, where if you pull back to that highest concentration of sellers and the rules are met, that's where the market is most likely to continue down. So here you can see the highest concentration of sellers. I don't know what that means. I'm not going to lie. So we just met, and man, I hate admitting this to the new people. I don't understand all the common terminology. I don't know what a liquidity sweep is. Hell, I don't even know how to pick a high volume point. I don't know what that means. And that surprises people when I tell them that I don't have a fundamental understanding of chart reading from a technical aspect. I know Nexgen. Nexgen is my only experience. And the one thing I'm really good at is when we talk a little bit over time, right on, is guys, you make me smarter. You really do. You guys that bring something to the table that I don't have yet, you guys make me smarter because I learn the language outside of the language that I'm comfortable with. But as you're learning Nexgen, I encourage you to use the Nexgen language and make the comparison and then say whatever you want, right? The triggers are down. I'm on the strong side of the triggers. Can you guys give me a Y if you see that I have absolutely nowhere to go? Absolutely no room to make money. Absolutely no reason to hope shit doesn't stop and bounce. Which means, here we go again, the hardest part of trading. The most difficult thing you'll ever do. With no room to targets. Nobody is big and bad enough to make me take an entry. That's it. Guys, that's day trading. What? I don't have an advantage? I choose to do nothing. And then the flip side of it is what? Everything is in my favor? You better believe I'm going to take that trade. Is that the correct look? Which chart is it? Big or little? Looks like a perfect 15-minute chart to me. Yep. Absolutely. So, Master B, one of the things I'm going to ask, if you are interested in trading the KISS plan, you don't need these large triggers. They're going to make you believe you should be looking for long trades when these triggers say down. So you don't really need the large triggers. You don't even need the background colors, to be honest with you. And if you click on this bad boy right here, it'll open up that workspace in a browser. And if you just click save, you could get that super simple workspace that takes those colors out and lets you see that it is in fact down, that there's not quite room, and that you need to sit on your hands for just a moment. Now what happens if they break? We'll start looking for those short trades, right? But until they do, man, I am so cool doing nothing. Don't have an anxious bone in my body. Don't have a nervous thread in my fabric, guys. Fake out's always possible, right? But it doesn't have to be. Who cares? And this is, sorry, I don't mean who cares ugly. If your life revolves around these three things, produce an advantage, this is when I'll take a trade, you don't care if there's a fake out. You don't care if there's an engulfing candle. You don't care if anything. You just say, hey, my rules are met. I'm going to take a trade. Guys, now it is strong triggers, strong side, down triggers. I'm below trouble, and I've got nothing but room to the next area. Does that make sense, everybody? That green line represents the bottom of that zone, which means that if I'm going to take a trade, I need to enter below that, and I need to not trade directly into this zone. Why? Because look what it's doing, guys. They tried, and they are currently failing to break. Y'all saying that's probably your fake out, right? That's the, oh, here we go. Dang it. The old fake out breakout. But what's cool is the rules aren't met. The rules just aren't met yet, guys. Now, Andy V, if you are that guy that says, man, if they peak below, I'm going to give it a go, better make sure everything is solid. But guys, this is just a pause look. It's a hold on. Well, the plan can be proven to win more than it loses. And y'all saying there may be a time where your rules are met on a fake out. Where your market, and I'll show you what it looks like. Where your market says, here we go, right? Here we go. We're breaking. We've got momentum. Oh, I can't wait. And you might take the first one, but you have rules in place to minimize the damage. And where you really see those fake outs, let me show you how effective rule number 2 is. Where you typically see those fake out breakouts is when the market has been consolidating between fibs. You'll see like one push up or one push down, and it's that last ditch effort, and I'm looking for a good consolidation range. They're trying to push up, they're trying to push down, they're trying to push up, and then finally they break out. They're trying to push up, they're trying to push down, they're trying to push up, and then finally they break out. And we have rules to catch that breakout. They're high probability trend trade rules. And that would be it right there. You thought the sellers were going to win, but they didn't. And it's cool. I'm a big fan of confirmation. I'm a huge fan of rules met. And I can tell you guys, when I follow my rules, I tend to win more than I lose. I do lose. I take losses, guys. I take losses every day. You will take losses every day. Running out of pictures, so I'm babbling a little bit, but I want to show you something. That was probably an opportunity to make money. All the triggers up, above trouble, momentum, and it went to the next spot. Maybe right here, all the triggers down, pull back to resistance. Maybe you found an entry, takes you to the next spot. And maybe you made $300 on this trade, and maybe you made $300 on this trade, right? And guys, that's the day. And in the day, all you've done is $600. Most of you hate the idea of a $600 day. Most of you don't realize that that's over $150,000 a year on $600 a day. Now here's where day traders tend to fall into problems. I hoped it would break, and I lost 250 here, right? I wanted that area to break because of momentum, and I lost 250 here. I didn't have any momentum to push the market up, and I lost 250 here. And now you're down $150, and you really only had rules met twice, guys. And what drains account are what I call avoidable losses. When you take the trades based on hope. When you hold that short trade where the rules were no longer met and give it all back, guys. And that is what this KISS plan is designed to do for you in the beginning. It's designed to keep you focused on the highest chance of success, to build that confidence not only in yourself but also the plan. And then the room is designed, as you learn these things, to make sure that your recognition of advantages is accurate by posting in the room, by asking questions. Guys, I love the sound of my voice, and every time you guys ask a question, I get to hear it. So ask the most questions, post the most charts. The record in the room is 77 posts by one user in one session. And you know what? That guy doesn't show up very much because he's making $2,000 to $3,000 a day in building hot rods. So it's up to you. Respectfully, yeah, buy software, Yasin. That's all you got to do. Just go buy the software. Are you working with somebody yet? Do you have a client advisor? Have you signed up for a demo? Or are you just visiting? I can get you in touch with somebody, no worries. We'll get you working software. You can come hang out for the rest of your natural born life in here. And we'll work together to get you where you want to be. You were working on a big server, but you're out. Do me a favor. If you will give me your email address or a phone number, and you can message me privately if you like, so you don't have to put it in the room. Oh, that's you right there. So you just requested me as a friend. Do me a favor. I just put "here I am" so you know that it's me and not a scam. Give me an email address or a phone number, and what I'll do is I'll have someone reach out to you today and talk you through the process and get you where you need to be. Welcome to Nexgen. Welcome to Nexgen. And guys, the same is true. You can always message me privately. And then going back to what Master B put in the room, and I want to show it because I don't want you guys getting caught. And so many people have, which is why the scammers keep doing it, guys. If anybody reaches out to you claiming to be Nexgen, if anyone reaches out to you asking to trade for you, if anyone reaches out to you requesting money via Discord, it's a scam. Delete it, get rid of it, block it. Guys, they will pose as me, they'll pose as John Novak, they'll pose as anybody that works for Nexgen. Please don't fall for it. We've had a lot of people give up a lot of crypto to these scammers, and they're going to keep doing it as long as it happens. Awesome. Yeah, saying someone will be with you soon. Let me get this in here. There we go. They know about you. They will reach out to you. I would expect a call soon. Open a channel for reporting scammers accounts if you would like. No. Used to call them posas back in the 80s. Fakes. Posers. Posa. Yeah. I'll walk to the top of the half pipe, but I'll never drop in. Posers. I love it. What are we looking at here, guys? Man, they just keep killing it to the downside, don't they? S&P is on an absolute nosedive. Strong trending market. Guys, with a clear path, very often, it is sell the mid-band until it stops working in a strong trending market. And we define that as 30 bars in the same direction without a reversal bar, guys. So we are 100% strong trending in the S&P. The NASDAQ finally broke, didn't it? Finally broke. Kept bouncing. That was your pullback. That was your close below everything that gave you room to trouble and started the big run down. And now we're back to trouble. They made it. Small triggers win, guys. There's your S&P absolutely cranking. What we just witnessed on NinjaTrader. Crude oil directly into trouble. Nowhere to go. Small triggers pointing down. No reason to take a long trade. What's gold doing? Oh, finally, something, right? Small triggers up. Transition. Pulling back to an area. What do we need, guys? We need a close on the correct side of the triggers to go up, transition, room to trouble. Does everybody see it? We are waiting for an up bar that closes on the correct side of the triggers, guys. If it happens from the mid band, guess what? Rules met. Let's see if I can do this real quick. I'm going to log out. I'm going to go into my AMP account. And if we get rules met, guys, we're going to crank this bad boy up. We'll do it on a 15 lot. If I get a close on the correct side of the triggers from trouble, from an area, from 1-to-1s, I will enter as long as I have room. As long as I have room to trouble. And guys, right here, I don't have room. But you see how I still haven't gotten a close on the correct side? Guys, this is my fly in the ointment right here. That zone is the fly in the ointment. That zone is the reason my rules aren't met. That zone is the reason I won't take this trade. Does that make sense? Room to targets. Room to targets, guys. It's such a big part of what we do. So we'll come back and we'll see what it does. That one didn't close above yet. Now if this one closes around 04, I've got a little bit of room. If not, I'll look for a second chance somewhere up here. We're still in a holding pattern. Not my money, guys. It's one of the hardest phrases you'll ever utter. Not my money. This is directly into trouble. It's not my money. Now, what if it closes above and it closes above trouble? How does that work out? Nothing in the way, right? Room to the next target. Miss Jen, oh, you got it. Down, strong. You waited for it to close below the trouble. You had room to trouble. Absolutely beautiful. Nicely done, Miss Jen. With all that room, could have held a runner. Management from the strong side. Bigger moves. Guys, there it is. And look at this. No trade, no trade, no trade. None, nah, no, All right, we're below. Let's go. Great patience, Jen. I almost called you Jennifer. I'm so proud. We cracked the code. Look at that. That one didn't even close above. Yeah, that's my wife too. Funny story, when we were in our 30s, Jen, long time ago, we were arguing about something, and I called her Jennifer, and she told me that I better not dare use her middle name. And I was like, what's your middle name? Fur? And we laughed so hard that the argument was over, and Fur has been a nickname ever since. All right, 5, 4, 3, 2, 1. There's our close on the correct side. We've got a little room to trouble. Stop has to go below the pivot. What's our expectation? Get up to trouble maybe? Be prepared to manage into trouble, guys. Be prepared to manage. Maybe take a couple off, right? Maybe take a couple off at an HVA. Whoops, I want more than one. Take a couple off at trouble. Right? Get that big push. There it goes. Man, we just rocketed above everything. You know what? I'm up $4,000. I'll hide behind the zone that I'm expecting to hold. I've got a target at trouble. Filling the down gap to the upside is so possible. I'm not even sure what that means, but all I know is that I can't lose. And everything says up, and I'm behind a zone, and my large triggers say up, and I'm on the strong side of the large triggers, and I've got room to trouble, and I've already made money, and who cares what happens next? Life is good. Watch this. I'll take some off right there. Will it let me? Nope, I've got too many contracts active. It won't let me sell 6. So we're just going to hold on and see what happens, guys. Worst case scenario is I make 50 bucks a contract. Best case scenario is we just ride the momentum, everything up, and we'll get off at the HVA up there. What do you say? You guys feel good about it? There's that high volume area, saying that is the highest concentration of sellers. We're getting close to it. Hell, lock in, right? Make your money, guys. We're here to get paid. Boom. There's your trade. This is where I dropped the microphone. We were in at 05. We were out at 09. 15 contracts. Did I pass my evaluation yet? No, not yet. I'm only up $6,000 today. I'm trying to pass a $158,000 evaluation in a day. That's why we did that one live. But guys, are there any questions? And look where it started back down from. Called the high freaking tick, guys. It's fun when the rules are met. How long did we have to wait, though? Andy V, did you catch it? I knew about trouble. I was ready to manage, but from the strong side of the triggers, that area was more likely to break. I knew that because every day in this classroom, Mark says that's where it's most likely to break. And if I'm going to take a shot, if I'm going to be tight, you better believe it's going to be from the strong side of triggers. And guys, it may not be done. This is a small chart roadblock. Large chart targets are outer bands. This is where I feel really smart. And guys, I'm not. I just know the rules. That's it. I know the rules. I know what it takes to get me into a market. I know what I have to look for on the large chart. And you can too. Learn your rules, guys. Ask for help if you need it. That was fun. What was, hold on, that was 15 contracts times $400 a contract. That was a $6,000 trade in my AMP account. Thanks, AMP. Minus commissions. I guess I should have put another tick on there for commissions, right? But did you guys recognize that we said not yet, that's not it, not our trade, don't do it, didn't get it, still not, there it is, go? That we said no on 7 bars prior to the actual rules met entry. 7 bars. We had to sit and gnaw our nails and tap our feet. But eventually, it gave us everything that we needed. Whew, that's fun. I should probably take a break. We got a reversal bar. Strong trending market is over. Guys, when I come back, Ed will start with your picture. If you have questions, post them in the room. If you have charts, post them in the room. If you need help. Paul W., when I took my entry from 05, I had $100 before I hit trouble. I had $100 before I hit trouble. $100, Paul. Which means I had $1,500. And I was ready to manage. Were you listening? We talked through it. We said that gives us room. No. The trend is up. This is a moving average. I'm from the zone. Man, I'll take that trade all day long. Paul, the difference between this mid-band and the mid-bands you traded into is you had one-to-ones lined up right on top of them. It's just a moving average. What's 2 ticks on a moving average? When everything says up, when everything says strong, when my small triggers rolled, when I close on the correct side, right? It's a moving average. These solid zones, that's what I'm looking for. Good stuff, guys. Now I have strong triggers. Now I'm on the strong side of the triggers. Technically, this would qualify for a momentum trade if it pulled back to the zone. But Paul, do you notice that here I wasn't worried about it, right? Even here, I would never trade into that area. But once that area didn't break and it pulls all the way back, man, that's trend tradeville, population me. Can you guys hear me okay? May need to reboot, Ed. He'll know. All right, I'll be back in just a couple minutes, and then we'll start with Ed's picture. It's still going, isn't it? Let's see if the momentum trade works. It broke, it pulled back, it has strong triggers. We'll see. You got it back? Awesome. I'll see you guys in just a minute. Take a break. I'm old. I got to get up and do stuff. All right, let's see. Ed, let's get some good news on this screen, right? Can't trade, can't get trade to show. This one was trade for contracts. You can't get them to show. So you got in, momentum potential to break. There's your signal. And just rock started all the way down, Ed. Nicely done. Yeah, the automated system won't show entries and exits, but I can see your entry right there. Strong triggers, 3 triggers through, pull back to the area, and just, man. But what's the difference between sim and live regarding trades, guys? Anything? Nothing, right? It's the same pattern, it's the same look. The only thing that's different are your emotions. The only thing that's different between simulator and live are the emotions that you pour into your trading because you're afraid of losing. And guys, when you trust, it's pretty crazy how that fear starts to go away. Andy, odds favorable momentum, potential to break. It didn't get your entry, so you jumped the fudge in. And Andy, you said that you didn't follow the rules, but look at it. It's strong triggers. There's absolutely nothing in the way. You didn't get your entry, so you said, well, here's the expectations for a trend trade. I'm going to get in. Yeah, beautiful. Took them all off. Rode that momentum. Nicely done, man. Once you have momentum and path, guys, it's hard to not do great things with this software. Miss Jen, we lost your chart. No term here. Price did reach a divergence here. And then the small chart changed. Small start to roll up. White bar, waited for smalls to get just above. Sell at the top of the zone. From 70. So you were about right here. Just quick profits, quick 3 points a couple times, 520, nice job. Nice job, Jen. And it was short-lived, wasn't it? Yep, bought 98, sold 11. It was tight. It was tight. Nice job. Aggressive and quick. I like that, but you knew it was aggressive, right? You knew that it was assertive, which is why it was quick. You knew that it wasn't a home run, tight stops. I love that, guys. That's what you do when you read your software. You say, oh my gosh, I've seen this, I know this, I've done this, I'm going to do it real quick, and I'm going to manage it assertively. And I'll GTFO if things don't keep running. I'll tighten stops up if things don't keep running. And guys, that's day trading. Management pays bills, guys. Great entries make management easy. True story. What would you guys like to talk about? I need one more home run so I can pass that. Look at that. It went right to the outer band, didn't it? What a horrible... Why did you guys make me get out at 09? Whose idea was that? Just kidding. I'm never upset about $400 a contract, guys. How could you be? How could you be? That would be silly. There was your momentum. 3 triggers through, pulls back to the areas inside of triggers, and off it goes. My contract sizes are big. So, Jim, they were big in this one. This is my AMP, Nexgen Pro Trader Funding $150,000 account. So I opened it up this morning, and I'm trying to pass it in a day. So in order to do that, I'm going heavy on the contracts. We're doing some testing, and part of the testing is you have to pass it, and then I've got to go up until drawdown stops. Go hard or go home. Amen. But it's the same trades. Like, gold didn't know if I was in 1 or 15. It just knew that I had to close on the correct side of the triggers and room to make money. And now everything is up, and I'm on the transition, right? and the small triggers rolled against me, and my only option is to wait for a pullback to an area and then get a close on the correct side of the triggers. And how patient does this make me? There's nothing to do. Small triggers down, wait for the push. If you get a close on the correct side, go. TV, hon, how do you update chart? Your TV Gold is showing October contracts. They should be continuous. If it's GC1 with an exclamation point. So Chariot, what you can do is over here, the little blue ribbon. It's not blue though, the little ribbon. Click on the plus button. Are you with me right now? Cool. So click on the plus button and go to futures. Type in GC. And then just click on it. And it'll go to, when it has the exclamation point, it's a continuous contract. It'll automatically roll to the most current contract. And then you can just, you can click on your chart and click on that. So guys, we're up. We're transition. There's our pullback to the areas. What do we need in order to take an entry here, guys? What am I looking for? Am I looking for it to reach the area against the small triggers? Am I looking for what? I don't know. Close on the correct side. That's it. And look, it just keeps freaking going down. Thank goodness I didn't try to buy a zone. Thank goodness I didn't use a limit order, right? Guys, I need this to come up. And with those 1-to-1s there, there's that hard and fast area. I need to close somewhere around 11.5 to have my rules met, to not trade into a 1-to-1. It's got some work to do. It's definitely got some work to do. Jen made some aggressive money off the termination, and now we're down. Now we're strong side. Hell, we got to close below the triggers. And look at it go. Trend trade. Trend Tradeville. Population U. Price at support. Smalls are down, large are up. I don't have momentum. Right? Don't have a clear path down. Look at that. Down it goes. You guys know what one of the biggest aggravations I had as a brand new user? There's always the next trade, Jen, always. And I'm just going to share this with you guys because I think I think everybody feels it. I used to hate watching people make money in the room when I wasn't making money. I used to hate watching Jen make $300 or $400 and I couldn't make it. I used to hate watching John Novak post a winner and I couldn't make it. Hell, I used to hate when some jerk face would take a trend trade and make a bunch of money and I'm not making it. And guys, what happens, and this is a true story, is that when you are on the outside and you're pining for the money that other people are making, and you're focused on, oh, they did this, they did that, they did this. Guys, the people that tend to make money are the people that are following the plan, that learn the rules, that practice, that present it in the room, that ask for feedback, that do the same thing every day. And they're not good because they bought software, and they're not good because they just showed up. They're good because they freaking studied. They practiced. They made mistakes. They got help. And if you want to be where that person is, do what they did. Guys, put the effort in. Put the effort in. And you'll be floored at how you end up there too. Ed, no, wait for the triggers to turn. Almost did. Almost break even. And then Ed, once they turned, It was so much easier, wasn't it? This one you're like, ah, and then when everything rolled and the mid band held and it was from a bad bottom, nice trade, Ed. I like the way you did that. I like that you said this really is my trade. I'm not going to panic, and now it's even better. Nicely done, man. 5 years trading, you keep moving. No give up. Don't be a quitter, right? Trader Ed, you love it when people take money from Mother Market. This is who we're competing with, guys, not each other. Amen. And guys, you know that for every trade that you take long, somebody's losing short. And for every trade that you lose long, somebody won short. Guys, it's equal and opposite. It makes sense to have an edge. It makes sense to put yourself in the position where when the people in charge say up, go up with them. And when the people in charge say down, go down with them. And guys, we're still up. We're on the weak side of the triggers. And if this bar closes on the correct side of the smalls around 0.72, I've got $130 to get to trouble per contract. 17 seconds before we know if that's actually going to happen. Somebody is Mother Market, the institutions, not the other. Well, on our level, I mean, we just don't fight. That's it. And that did not close above, therefore, no long trade. No long trade. Guys, you can call them anything you want, right? You can call them the man, the market, the institutions, the big money, whatever. The retail trader, the little guy's the guy losing. Your 2 contracts is 2 contracts. Either you're trading with it or you're trading against it, right? We're going to watch this one and see what it does. We're going to see what it does. We've already reached the outer band. Really strong triggers down. I've got 22 seconds. I'm on the weak side. Weak side. And y'all saying there's your guy to get you going. Jim Forbes has you. There's my close, but it's a down bar. I needed an up bar. I'm going to sit a little bit longer. So y'all saying give Jim Forbes a call. There's his number. He'll get you taken care of. Get software in your hands. Just keeps going down. So guys, what do you want to talk about? We got another 20 minutes. John was here just a little bit earlier. I'll give him crap for not annotating privately, Andy. John and I talk every day. Did you guys know that I use John Novak the same way I want you guys to use me? When I take a trade, I send it to him. When I have a question, I ask him. When I'm working on a pattern, guys, I'm looking to him. I'm looking to him. Send him an email, Andy. He'd love that. I use a coach the same way. I use a coach in trading. Hell, I had to use a coach in golf. My golf game got so bad, I had to pay somebody to fix my swing. And I'm almost there. Now I have to practice it. Now I got to create the recognition, the muscle memory. All right, here we go. You're going to clean up, go visit your PA, your pa. I like it. Hope he's doing well. Hope he's happy. How fortunate for him to have you. Take care, Andy. All right, guys. This was John Novak. 2008. So I'm going to read through it, guys. Nexgen will supply the Fibonacci-based software, and this would read indicators today because now it's not all Fibonacci-based. Trading rules along with the coaching that'll increase your odds of winning more than you're losing. And after you choose Nexgen to be your technical analysis partner, don't worry about how long it'll take you to become a profitable trader. Worry about the process of learning, guys. Worry about going through the process that produces results. Simulation of your trading plan is not trading. It is practicing the movements of trading until they are so ingrained in your muscle memory that you no longer have to think about trading your plan consciously. This will be your first goal. But Mark, I can't make money on simulator. Well, most of you can't make money off a simulator if you don't have your plan, so why not get good on simulator? Your second goal will be to simulate 25 of the same trade setups. When you learn your rules, when you understand the patterns, 25 in a row, guys. And following your plan without deviation, distracting thoughts, or hesitation to act. You may recognize that verbiage from Mark Douglas, one of the gurus in trading psychology. He and John Novak spoke extensively in the 90s. And a lot of what we do comes from his ideology, probabilities. Writing down, using screencasts, labeling your charts, what you could, should, or done better, getting feedback from the Nexgen staff. Your charge ends. If you can't make it in sim, you probably won't make it live. Guys, if you pucker up in simulator, you're going to panic live. Everyone's different. It'll take time to become unconsciously consistent in entering and exiting your trades. The more times you complete 25 of the exact same trades on simulation, posting charts for feedback in the room, following your plan, the closer you are to becoming profitable, guys. You don't have to win all 25. It's probabilities. Win more than you lose. You should be able to win 15 and still be positive. Every time you repeat that process, you're getting closer, guys. And then when you get to that point to where you're winning more than you lose on simulator, go trade real money, guys. And this is what prop firms are for now. This is what Nexgen Pro Trader funding is for. Go test your plan. Risk $79 instead of the $5,000 that I lost. And if you don't win, go back to simulator. It's okay. You're not losing. You're learning. Becoming a great at any profession has a cost. Your cost is small losing runs as you learn to become confident and profitable, guys. And then when you learn to follow your plan, once you understand it, once you can follow it, it's hard to lose that. And then here's the thing that I'm going to post, and I post this every day. Nexgen provides analysis. Nexgen gives you the rules, guys. I provide the coaching daily in a live environment. Only you, yourself, will be responsible for becoming the profitable trader, guys. I'm here to help. Call him right now, Yasin. Call him right now. Make his phone ring. Nexgen's here to help, guys, but you got to do your part. If you refuse to study, you're not going to get smarter. If you refuse to post in the room, you'll never get feedback. If you refuse to learn very simple rules, you're going to make the same mistakes over and over and over. So your part is to be motivated to be successful and do the work that it takes to become successful. He's on the mend. If you can't make it in sim, sorry, charge ends. All right, Ed, let's see what you did. Taking every fiber of your body not to trade into a termination. Gonna need you to burn that book. It's putting bad mojo out there. So what do you have? Oh, I like that you have the big one, right? But divergence from a fib, Ed, I'm going to say you made a good decision. And the market's messing with you, right? So let's go look. Ed said, man, I wanted that to go down even though it was into a termination condition. So Ed, actually, you know what? I don't even have to make the picture. Ed, that was my biggest challenge. I'm sure that I've admitted this in front of everybody more than once. My biggest challenge was trading in termination conditions, that fear of missing out. And it was literally taking pictures like this where I realized, and this is where we go Ricky Bobby, right, or Anchorman, 60% of the time I lose every time. 60% of the time I trade into a termination, I lose. It's probably higher than that. And then Ed, my gosh, you had so many red flags in that picture that you paid attention to. Divergence, right from two fibs, smalls inside. You had so many reasons to not feel comfortable with that look. And it's hard, right? The market goes, but Ed, Next time, break that rule. Ed, next time, trade into that termination. Come on, Ed, you know you want to. And it's like those old Tom and Jerry's where the little devil and the angel are on the shoulders. Eat the mouse. And the other one's like, oh, don't eat the mouse, right? And it's about probabilities, and it's about consistency, and it's about having advantages and being able to define those advantages and having an edge. And guys, that's what we talk about every day. Every day. Every day. The same darn thing. Momentum, path, and entry. The same darn thing. Defining advantages. The same darn thing, guys. And you just got to get good at it. That's it. You got to get good at it. You got to practice it. You got to study it. You got to apply yourself a little bit. I got about 20 minutes. Is there something specific you guys would like to talk about? Is there something that's on your mind? Did gold ever give it? They never did, right? They gave one, and it just didn't go. And look what it did, because it had already reached the termination condition, guys. It already reached the termination. Already hit its target. Do you guys know that you can use it on crypto too? That you can trade crude oil? That you can trade the S&P? That you can trade the NASDAQ? That you can trade Ethereum? That you can trade Apple stock? It's just patterns. Just patterns. Jen, did you take a quick 10 points there? Termination, white bar, opened above, in at 32, out at 46. Quick 14 points, Jen. That's your trade. That's the one that you do so well. I hope you got it. That's a lot of money in that move. Nice job. It's so quick. But it's one reason to enter, right? And it has nothing to do with your opinion or your emotion or the way Mars is in retrograde to Venus. It is a termination. It's the small triggers not against you. It's the white bar. It's the open above. It's the get in and make money. And Jen, I think you do it as well as John Novak at this point. I think you take that trade as well as my brother. Your reflexes are amazing. George T. On Ninja Trader, let me get to Ninja Trader. On the ES, here we go. Looking at the big chart and nothing going short, but the small chart and divergences printing. Do these divergences dictate direction? They do not. So let's do it real quick. So check this out, George T. We're going to keep it simple. And let me know if this helps. Do you see the smalls inside of the large? It's no momentum, right? Pretty cool. It is a downtrend because the background is red. And watch this. You do have a clear path, but George, do you see how there are no areas inside of triggers? So you also have no entry area, which means that once you get to the other side of the triggers, you don't know if, when, or where the market is going to stop. In George's simplicity, very basic understanding of the rules keeps you out. But let me show you, let's make the lesson even bigger. This is a loss of momentum. 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 And your small chart is showing you change with those triggers rolling, with the smalls getting above the large. And it's showing you change, that the market is more likely to push up right now than it is to go down, even before these roll. Once these roll, now we've got momentum up to the good side, to the north side. Does that make sense so far, George? All right, I'm not done with the lesson. This is pretty cool. Do you remember that in order for a pivot to be considered a strong top or bottom, it must be first a termination, then a reversal. And this isn't a termination. This is nothing more than a pivot from the middle of nowhere with weak triggers. Does that make sense, everybody? We're going to talk patterns, George. When I have a weak bottom, that sounds funny. When I have a weak bottom, the mid band is more likely to hold. So as I get up to that mid band, and I've only got 2 triggers through fibs, and I've got a loss of momentum, I'm not looking for that long trade, because very often they're looking for the next Fibonacci area. They may be trying to get down to 67.26. And look at how often that happens. Whoa! Not quite a termination. Mid-band holds, continues the strong trend. Weak triggers, pulls back to the mid-band. Mid-band holds, continues with the strong trend. No, and that's okay. You won't see this divergence until like 3 bars up. You won't see the divergence until like 3 bars up, George. But what happens is you can say, I don't have momentum to push this market in the direction of the trend. And my small chart's losing momentum as well. And before those triggers ever roll or that divergence ever prints, your small chart already has odds favorable momentum up, saying, hey, we're probably not going down just yet. So it's the small chart showing the change that you can't see on the large chart. The same reason we use the small chart for entry, we can really see a change of direction over here before it ever happens on the large chart. Does that make sense? So while it doesn't change the trend, the overall trend, it doesn't add momentum, you can literally see change happening in that 1 bar by using a couple patterns on the small chart. If you guys are using the automated system and it gives a short trade, that second divergence, that higher divergence, is a great exit condition. If you're managing your trades in NinjaTrader, that second higher divergence is a great management condition. And because it was a weak bottom, the mid band holds, and look what it's doing, guys. They're getting right back to business, the same business they have been in since that termination reversed the market at 6:35 a.m. That's patterns. And now I've got momentum. We'll see if I can get 3 triggers through. Right now I've got 2 triggers through from that mid band that terminated everything with the reversal. Strong triggers on both charts. If I get a pullback, watch how you guys will call your shots. If I get a pullback, I've got one line inside of triggers. Do you guys see it? One point where the market is most likely to bounce and continue with this momentum and that potential to break. One line. And I know it before the market ever retraces. I know it before I ever get a pullback. And if I get a trade, guys, I've got an awful lot of room as long as 51 breaks. Can't have divergence because that kills trades. You guys want to see if it gives us an entry? 2 ticks below resistance. If we get an entry, our stop goes where the market shouldn't. Right there. Does that make sense, everybody? Momentum, potential to break from a termination. Looking for the pullback to the area inside of triggers for continuation with that momentum, with that potential to break. If you learn rules, you will call your shots. It doesn't mean that they'll give you an entry. The only challenge with this trade, and I want to say it in the beginning, only 2 triggers are through the area. This does not fit the KISS plan. I have to cancel in front of a live room, but we'll watch it. We'll see what happens. I'm not allowed to take it because it doesn't fit the KISS plan because 3 triggers aren't through. It doesn't optimize my chances of success. There's your pullback to the area. We're still in the retracement zone. We're at the area likely to create a bounce. It's only 2 triggers. There's your reversal bar. If you are in at 52.50, 50.50 is $100. You may already be break even in this trade on the potential to break. Down it goes. We need to see 48.50 for a $300 trade. There it is. Ladies and gentlemen, welcome to Nexgen. You can call your shots. You know exactly where the market's likely to bounce. You know exactly the conditions it takes to do it. But because it wasn't 3 triggers through, I chose not to because my goal is consistency. A lot of you are going to grow outside of that in a market that's been strong trending. Any questions about that entry? We knew about it before the reversal bar ever printed. We knew exactly where our entry belonged before the reversal bar ever printed. We knew exactly what we were looking for. We knew exactly where our stop would go. We knew exactly where our targets were predetermined. And guys, that was the easiest $300 ever. Now it's 3 triggers through. The difference is I don't have strong triggers now. My smalls are above. Divergence is printed. This doesn't fit the rules for the KISS plan that's designed to optimize your chances of success. Some of you may take it anyway. I'm not allowed to, guys. The only way I will ever take a trade in this room, the only way I will ever pull the trigger is if the rules are met. And I don't have smalls outside of the large. And I had divergence. It's not my trade. It's not my money. Miss Cindy, weak top, clear path. The entry was perfect, but it was too fast. So you take the momentum style trade and make a little money on the way down. You catch the second leg of it. Nicely done, Miss Cindy. Because what's the expectation? With this look, they're likely to get to Fibonacci. So you just took the trade. I love it. Great job. Nicely done. And guys, I will be doing the highlight reel once again. I'm doing it every day. You enter at the candle, close open, right? No, sir. So Yasin, it depends on which platform you're trading. If you're trading NinjaTrader, you will literally wait for the market to come to you and you will enter right at the area. If you're on TradingView, you have to wait for a close on the correct side of the triggers to take the trade. So it's 2 different platforms. So depending on which you're trading, depends on how you're going to enter. And I give plans for both. So you know exactly what you're looking for. Guys, did you notice that without momentum, with divergence, they blew right through that freaking midband? Do you see it? I hope you see it. Because your plan that I hand out every day says that you're probably not going to win that trade. And sure enough, there it goes, right past your entry. Pretty cool, right? I love it. I love it. 2 triggers through, there's that darn divergence. Sure enough, it pushes lower. Room to trouble, 2 triggers through, divergence. Every now and then it's going to give you one. You use TradingView? All right. So your plan, when you get the indicators, will be the TV new user plan. And that's the one that uses the close on the correct side of triggers for those trend trades. Trading doesn't have to be stressful, my friends. Trading doesn't have to be difficult. Trading doesn't have to be hectic. Trading doesn't have to be full of nerves and anxiety, guys. It's just learning a couple rules to identify a pattern so that you can capitalize on the advantages that that pattern creates. And that's Nexgen, guys. We've been doing this for 28 years, teaching people to trade the markets. We have had live education for the last 20, maybe even longer than that, maybe 25 now. At the risk of seeming a little cocky, I'm going to say we're pretty good at what we do, guys. The only thing that we've never been able to do is convince you guys to study. The only thing we've never been good at is convincing you guys to post in the room. The only thing that we've ever struggled with was getting you guys to ask for help instead of trying to be all macho do it yourself. You know who I'm talking to, macho people. Good stuff. All right, guys. Let me shut down today's video.